Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and guys, we're going to make some money today, so hit that like and subscribe button if you're ready. We have the one and only Imre joining us. It is FOMC today, so we'll be hosting this live session right now, going over the intro, the pre-FOMC, giving you guys some trade setups to watch throughout the day, and then later we'll be right back here at 2 p.m. Eastern covering the FOMC meeting and everything else that entails. So guys, run that like button up if you're ready. Market in the Morning starts right now. Yo, Imre, good morning, man. How are you?
Hey, I'm excellent. How are you, Kevin?
Bro, I'm doing good, man. Another day, another dollar.
Yeah, man, you got it. You got it.
So what's going on, man? What's new? It's been a week since we last had you on.
Yeah, it's been a week. Seems like everything in the world has changed. We had an insane SpaceX IPO. We've got a peace deal with Iran. We've got a new Fed chair with his first FOMC coming up. We are just rocking and rolling.
Bro, how exciting, man. What do you want to start with first? Do you want to share your screen? We'll cover a little market.
Yeah, let's do it. Let's do it. Let's bring that up.
Awesome. Guys, good morning. Silver, Famous, what's going on? Welcome. Andrea, good morning. Matt, what's up, guys? Good morning, good morning. Hope you guys are ready for a great day. Salim, good morning. Awesome, guys. It's going to be great. Awesome. There we go. There we go.
All right. So, we've got a lot going on here in terms of news to watch out for today. Obviously, with today being FOMC, that's something we're going to want to keep an eye on. We've also got the Bank of Japan that's recently marking a significant shift in monetary policy, but that hasn't really been met with an amazing reaction from the markets. So there is a lot going on indeed. But when we're taking a look at what the actual price action is doing, we're starting to see something really interesting, I would say, between the S&P 500 and the NASDAQ. So the big thing is that we have this gap in the S&P 500, right? That gap up to start the week on Monday, and we've been trading inside of Monday's range ever since. Now that makes for some tricky trading conditions for you traders that are looking to trade ES or S&P 500 on the CFDs. I think it's a very tricky trade until and if we start trading towards the bottom of that line right there. Now, this is an interesting day today because really all eyes will be on Kevin Warsh. We know just based on the market terminal that the interest rate expectations have been really unchanged, right? And
Yep.
Kevin, do you have that up actually?
Yeah, let's pull that
Take
up.
a look at the Fed rate tracker.
There we go. Look at that 99.8% chance. You think he's going to wing it on that 0.2%?
Crazier things have happened, but that would be up there, like top three most insane things ever, I would say, as far as Fed decisions go. But what's interesting is if we look out at September, what do you notice?
Wow. Big drop.
Big drop, right? So it's not so much that the market is expecting monetary policy to remain dovish under Warsh. They're seeing holds, but as we go into the fall, as we near those very important midterm elections, things could start to get extremely interesting. And obviously, so much could change between now and then. So as far as the rate decision goes, we're not expecting too much. But as far as the language that accompanies that statement, that's what market observers will be keeping a very keen eye on. Now, there are some FOMCs where I'm all for it, and I say, we could definitely start trading. I think this is one of those where you are, frankly, just better off sitting back, sitting on your hands, waiting for how the market is going to react. And although I'm not much of an Asian session trader, I think the Asian session could be fantastic for certain other markets. Probably not ES, probably not the NASDAQ, but maybe for gold, maybe for you FX traders, there will be some FX movement that I'd be excited to trade during that Asia session.
Awesome, man. So let's pull up your screen, show us a little breakdown. Let's set traders up for success today, man, just like we do every stream.
All right, so with ES kicking things off there, I'm not really interested until we can get to the bottom end of the range here. There is this saying, pardon the crudeness of this saying, there's a saying, don't diddle in the middle. And we're kind of in the middle of Monday's significant range, and you do not want to be diddling there. So wait for perhaps a gap fill, perhaps to see how we trade into that gap. That's really what I'm paying attention to today. But as far as day trades go on ES, I'm not all that interested. However, we take a look at the NASDAQ, and we can see that we're towards the lower end of that range of Monday's bar in the NASDAQ, right, coming in at 31.91. And we can see that on Tuesday, we swept that high, tried to make a run for it, absolutely failed. So it'll be very interesting to see if we get that gap fill, or at least a partial gap fill in American equities. I think that's something to be keeping an eye on. The other thing too is, do market observers really expect a super dovish wash? That's an interesting question. And I think if the answer is yes, I think you're going to be disappointed. I know he's Trump's handpicked guy, and Trump really would want to put someone that's an ultra dove in that seat. But historically, that hasn't been Kevin Warsh's MO necessarily. I actually think he's a very reasonable guy in terms of his connections to Wall Street, in terms of his personal connections, and as well as his political connections. He's got a very tough job to do. He's got to keep everybody happy. He's got to keep Wall Street happy. He's got to keep Trump happy. That's not an easy job to do. So if he comes out saying things that are even slightly hawkish in tone, I do definitely think the odds are relatively high that we could see that gap fill in the equity indices. Now, let's move on to another interesting chart. Before we start heading into gold and the dollar and oil, I want to look at yields. So yields are going to be really interesting because they help shape what the market's expectations of monetary policy are relative to where the current interest rate lies. Now we can see that since Monday, we got this huge peace deal. We got a big gap up in American equities. Yields have held fairly steady. We have not had a big crash off in yields. Yes, the peak from middle of May was relatively high from where we are right now at just under 4.69%, and we're at 4.4% right now. So roughly a 5% delta. However, we're holding steady. It's not like people are saying America's borrowing rate needs to drop tremendously. Now, why that's important and how that helps shape what we're looking at for other markets like the dollar, gold, is that a movement in the yield can help assist with how we can start to think about repricing certain markets, whether it's gold, whether it's crude oil, whether it's the FX currency pairs that you're looking at. So that takes me then to gold. We hit that 4107 level that I've been talking about for a long time. Being gold short was a fantastic trade. I'm personally very neutral on gold right now. Very, very neutral. Now, we've popped above what I call a control level of 42.59. And I'm looking now for a move between 42.59 and 44.11. That's kind of the range. But it's not a very exciting trade. I think very short term, I'd be focused on 44.11, see if we can pop above that. Above that, I've got further upside targets spanning 45.36 to 45.86. But again, if we're looking at more intraday type of action and we see this, we have what? We have a range. Now we have a range building, and we can see that attempts to go above the fair value of that range and below the fair value of that range have all been stuffed. So until we see significant value migration outside of the fair value range, I'm not too excited to be trading gold either. So I'm sorry if today's shaping up to be, in my view, a boring day, but I think the work that we do during the boring periods sets us up for a lot of success when the market inevitably gets a lot more exciting.
Okay. Absolutely. Markets need these boring days. I always say, look at it like, cars need to stop for gas, right? Markets can't just keep driving in one direction. They need to park it, which is when they go range bound, fill up on gas, which is all the traders who try to force trades in those range bound price actions, and then they're able to continue. So guys, that was a bit of a breakdown on gold. I'm going to share my screen real quick so you guys can see GC versus XAU USD as well. Similar zones, similar areas. So gold GC was around 43.80 for that high. Like Imre mentioned, this is the top of our range for the past couple of days. And then the low on GC is 43.30. XAU USD, the highs are near 43.47, 43.50, and lows around 43.09. Awesome.
All right, thank you for that, Kevin. And then the next major market, that I track is going to be oil. Oil has smashed all my downside targets and gone considerably further than what I was looking for. However, I think oil bears, oil sellers, have taken this a little bit too far now. Even on a purely mean reversion basis, I am bullish and constructive on oil. The question for me really is, was this move down? How much of it really was a very technical move? In other words, where algorithmic stops got triggered and we had some forced liquidations, versus how much of it is really narrative driven with this peace deal with Iran. Now, speaking of this peace deal, I'm just gonna, introduce a little bit of my own personal color here. I don't know if you guys have read through any of the details of this supposed deal. There are none. It's basically an agreement to reach an agreement with very little specifics. And I would say that if the deal goes through based on what Iran is saying is going to happen, it would be like the ultimate humiliation ritual for America. It would basically be an outright admission that Iran has won this conflict and really gets to move on with no consequences, except for obviously losing their leader, but the regime is just carrying on as they have been before. So, I still think there are some twists and turns to come in this story regarding this deal, but we'll obviously have to wait and see. In terms of trading the market in front of us right now, what I can see here is structure to the downside has not yet been broken, right? So I think it's a little bit premature to be hopping into crude oil longs necessarily. But what I would like to see is at least the break of some market structure, at least the break of this pivot, and I'd be looking for value to start building above that pivot. So something like that would be an ideal setup to look for some mean reversion plays. I don't think being long crude oil and swinging for the fences here is a high probability play, but I do think there is some opportunity to selectively capture some mean reversion to the upside. And if there is some Fed-assisted volatility that can help with that, all the better. Awesome. All right, so taking a look at the dollar. Last time we took a look at the dollar, I was calling out this roughly 5% range since June 2025, and we can see we got to the top of the range. What happened? We're seeing rotation right now. Does that necessarily mean we're going to rotate all the way back down? I'm not so sure. I'm not so sure that would be a very big move. I'm certainly open to it, and I have my own personal reasons. I have a bias on why I think the dollar is going to be fairly bearish now. However, we have to wait and see. I think this FOMC is going to be pivotal. So long as we remain below the upper side of this range, however, I will be looking for reasons to be more dollar bearish than dollar bullish. Now, that's not across the board. That doesn't apply to the yen. But if we're looking at some of the other majors, that could absolutely apply. Euro, Aussie, et cetera, even the pound, not necessarily the Canadian dollar, which has some structural issues there as well. Here is my very basic, and I'm interested to get your take on this, Kevin. Here's my very basic take in terms of what's going to happen with the U.S. monetary policy. I do think the political pressure from the Trump administration does count for something. I think it does count for something. So what does it count for? Well, America can withstand raising rates and holding back a little bit longer than, say, Europe can, a little bit longer than, say, Asia can as well. So they have a little bit more wiggle room. And I think that delay in terms of shifting back towards a more, let's say, a less dovish stance in terms of monetary policy could see interest rate differentials start to widen, start to be priced in as widening between the dollar and its major peers. And we could see that result in some dollar weakness, right? So I'm not saying that I think that there's going to be massive capital outflows out of the US. I still think US equity markets are going to dominate. However, on an FX basis, I can see the dollar start to soften.
Yep. Okay, no, I'm with you on that. Trump, I feel like Trump has always been trying to keep the dollar lower, right? That's sort of been his go-to. He wants equities higher, but he's also, a bit of an extreme in a sense that when we get these bear moves, we get these really strong bear moves. We get these bull moves, we make all-time highs, we fly really strong. So I think it's important to keep an eye on things like you said, the dollar yields. In terms of policy, where Warsh is going, I'd love to see him a bit more hawkish too. What I wonder is, like you mentioned, a lot of people think, well, Trump picked him. Doesn't that mean he's going to be a bit more dovish if Trump wants that? Well, on the other side of that, he could be a bit more of Trump's fall guy, where Trump elects and gets people into a position where they could not so much take the blame, but end up in a position where he doesn't want to be the one saying, we need to hike rates. But he's pointing the finger saying, oh, well, it wasn't me, guys. He said we need to hike rates. So I'd like to see some follow through there. In terms of oil, I'm with you too, man. That drop on oil, I can't believe we're below $80 that fast. We've been keeping an eye on it in the market in the morning episodes. We just broke a crucial level over here on oil. Oh, no, we didn't break that actually. This is around 75. Is it 75, 70? No, 73.94, that recent pivot low. But we see that we are trying to create some lower highs. We have been pushing lower. We have the peace talks in line. Friday is supposed to be when we get those peace talks. Not peace talks, but the actual deal itself. Now, there were already talks, and I believe J.D. Vance also confirmed $300 billion to Iran. Did you hear about that?
Yeah, that is an absurd number. Like that is absurd. That number does not make any sense.
Yeah.
Like I said, if this goes through the way it looks like it's reported it's going to go through, is the ultimate humiliation ritual for Trump. Like it makes him look so weak and so pathetic.
Not much of a win.
Even the spin master that is Trump, I think, would struggle to portray that as a victory.
Yeah, no, that's pretty hard to say. Yeah, we won that when we're opening a strait that wasn't closed to begin with. We're giving this country $300 billion. I'm pretty sure Obama did $2.5 billion when he made a deal with them. So very difficult. Yeah, Friday is a bank holiday. Great call by Tebow in the comments. So U.S. markets are closed on Friday for Juneteenth. So I don't believe we're going to have a market in the morning episode that day, but we will keep you guys posted. 300 billion investment from other companies, Gulf countries, but Trump said the U.S. won't invest 10 cents. Okay, yeah, we'll see. You know what? It's all about, what he comes out and says. I think he said Thursday. Vance was like, oh, it's going to come out, he said this yesterday. It's going to come out tomorrow, Thursday, no later than Friday. So we'll probably get it sometime next week.
Yeah, it's also that the optics around it are one thing. Yep. The other thing is really, where's that money, gonna come from? I just don't see a way around it where the U.S. is not ultimately, footing the bill on that. It's really tricky. Like the U.S., I think, has accomplished absolutely nothing here. It looks like there's not really going to be any movement on the nuclear issue. This is really, really, really embarrassing, I would say, for the U.S. And it's why I think there will be twists and turns to come here. If I'm Iran, if I'm the leaders of the IRGC, right, which is really the real power in Iran right now, used to be the clerics. With the aftermath of this conflict, I do believe the real power does reside with the IRGC, and that's where all the money is going to flow to. I mean, geez, like it's interesting. It's really, really interesting in terms of how this has become such a fait accompli, as you would say, a very embarrassing watershed moment in U.S. foreign policy. So yeah, we'll have to see how that plays with the midterms, but I think we're setting up for a very interesting end to the year. I know it's June. I know I'm looking like 4 or 5 months ahead, guys, but man, I think this is going to be a trader's paradise.
Yeah. Volatility city.
Yeah,
absolutely. Yeah. So I just looked up what's cool again with market, guys, is that you could look up specific keywords in the headlines, right? So I went under high impact. I looked up 300, and the first headline that comes up is an hour ago. Trump denies report of 300 billion funding as false. Now, he's done this before. We've had so many back and forths. I don't think just one headline saying it's false is the make or break of this. I do still think it's on the table. Vance wouldn't confirm it on national TV. There's still other headlines surrounding it too. White House defends Trump's Iran deal that could unlock $300 billion for nation's reconstruction investment. U.S. to allow Iranian oil sales during 60-day talks. And what's cool too, I want to point out, look how cool this market update is down here. Market analysis, risk on, risk off, supply disruption, how it's highlighting keywords for you guys to keep an eye on. And then it also has related coverage down here. This is sick. This is very cool. Shout out to the development team in the back end. This is so cool. Now, I want to talk also with you, Emery, about SpaceX.
Oh man! All right, let's get into it. Let's get into it.
Buy or sell? Let's start right there. Let's pretend we're on like a Kramer talk show. Buy or sell?
Man, so that really comes down to what your I would say trading style and trading objectives are. Let's be real about a couple of things. The valuation doesn't make any sense, right? And now valuations don't have to make sense. If markets made sense, a lot more people would be great traders, right? So it's not always about the logical thing with markets, but what we're seeing here is, I would say, absolutely historic. You know, with SpaceX overtaking Microsoft in terms of net valuation. We're already seeing SpaceX make insane, and I mean insane, acquisitions, like buying Cursor for $60 billion, not even a week after you IPO is, I mean, that is a massive set of cojones there. You know, and here's the thing, like I do think there's an argument to be made for being extremely constructive, i.e. bullish on SpaceX into the future. And it's something that I look forward to adding to my own portfolio. But I don't have anything long-term in SpaceX right now. I don't. I say this all the time. I do not like paying retail prices for anything, right? Call me cheap. I like a discount. There's no chance in hell that I'm going to buy SpaceX at current valuations. It just does not make sense to me. That said, from a day trader's perspective, SpaceX has been a fantasy. I don't know how many people here day trade stocks, but this has been a very fun stock to be day trading. You know, I haven't had really any liquidity issues. I'm also not sizing up too crazy, but playing this range here has been a lot of fun. So you're asking for my short-term opinion. You know, I think we've got some range-bound price action that we could be taking advantage of here. Today's announcement is certainly going to play on the price action, and I wouldn't be surprised to see further rotation lower. But you look at this on an hourly chart, we had a gap fill here, and we're trading higher in the pre-market. You know, so yeah. Do we go back to the top of the range before the FOMC? I wouldn't be shocked by that. Like, I'm actually looking for that move. So I might be day trading SpaceX to the upside there and looking to take profits, and I might be inclined to look for a small short position as well to play potentially for a deeper fill of that gap.
Awesome. I like it, man. I like.
But this one is not for the weak. You know, you know, if you've never day traded stocks before, today is not the day to start.
Yeah, definitely don't get started with SpaceX. Now, I know options are also coming out on it. There's also talks about when you buy SpaceX that you're sort of locked in on some platforms for that, what is it, 60-day or 90-day period? Did you hear anything about that? What are your thoughts on, like you said, new investors getting into investing just because of SpaceX? Do you think there's going to be some type of liquidity grab at some point?
Yeah, definitely. There's also going to be ETFs and inverse ETFs that track it. We live in a world now where you can very quickly get exposure to an idea through a variety of different ways. There's going to be prediction market bets as well. Obviously, the liquidity on those is going to vary. But I believe there is an inverse ETF already for SpaceX. I think it's SPCQ.
Let's see. SPCQ. Yeah, 2x short on SpaceX.
Yeah. So there's a lot of ways, you know, there's a lot of ways to get exposure to this stock. The options market, you know, when optionality comes out on this, that's going to be a lot of fun. in my opinion, options on SpaceX is going to be, I hate using this term, but if you know what you're doing, I'm not going to say free money, but you can structure really powerful strategies using options that don't require buying zero DTE calls and puts in order to benefit from SpaceX. The bottom line is that I think the volatility in SpaceX is going to stay elevated. And if the volatility stays elevated, options trading is going to be very lucrative.
Yep, 100%, man. I mean, this thing, it's an Elon company, so it's something to think about too, right? Tesla has always been a company that's been extremely high on the PE ratio and yet has never been able to make its way back down. So, but is $3 trillion of market value really necessary for SpaceX? Like you said, a company that hasn't really proven that yet, especially in the revenue route.
I don't think that's necessarily what's driving it. I think what's driving it is that we have a lot of money still that can come into this market, and it has to find some place to go. And it's not going into crypto right now, right? Like I think if we didn't have SpaceX and we didn't have all these crazy AI companies, we would see more funds flowing into crypto. However, you can realize far better returns, backed by an actual company trading on an exchange right now than you can in crypto. So I think there's a lot of money that's flowing into certain stocks, certain names, that's not flowing into other traditional risk-on asset classes. I say crypto is traditional. It kind of is now, and it's not just a crypto story. It's not just a crypto story, but we're also seeing, if you look at the various sectors that make up the market, we're seeing, I think, strong performance across the board, which suggests that breadth is improving. I still think this is a very narrowly driven market with very clear generals, very, very clear generals. But, I'm looking at financials being very strong right now. And that's been a very interesting sector to take a look at. Let me just pull up XLF. So we can see financials here pushing higher, finding a very sharp bottom back in, height of the war, March 30th. And we're now pushing higher. This looks bullish. If we can build value in what's called this low volume node here, if we can start building some value, I can definitely look for a higher push. Failure to build value would make this a very interesting short trade indeed. But so far, XLF financial sector looking very, very constructive. We also look at the gold miners, right? So gold has sold off heavily, but gold mining stocks are holding up. At least they're coming back closer to the 50-period moving average. So very interested to look at miners. So on the other hand, we can see things like semiconductors starting to pull back a little bit. We saw that with the NASDAQ, where we had a rally past Monday's high, then a pull back. So we see that in SMH. We see that in XLK a little bit as well. So we're seeing some rotation. And I think a lot of those flows have been moving into names like SpaceX. So that is definitely a hallmark characteristic of a very bullish market. If you want to use the word bubble, I wouldn't blame you. I think that word is overused. It's been gotten to the point where I don't even know what a bubble is anymore. But I do think right now the narrative is look for absolute returns wherever and however you can find them. And when you have an environment like that, and it's that frothy, yes, the potential to be a bag holder increases. And I think the potential to chase stocks, hot names higher and higher is only going to increase. However, if money is flowing into something, it's going to be flowing out of something. So there's going to be rotation. Telecom has been a very strong sector, right on its 50-period moving average. Okay, so I'm looking to see if we get further breakdown here in telecom. I'd love to see us pull back in telecom just below 200. I'd be likely a buyer at that stage, likely be looking for plays in the telecom sector at that stage. This has been a phenomenal sector to be trading, right? So there are some hot names that I'm also paying attention to. Broadcom has been on an absolute heater, and it's pulling back now. And in a market environment like this, when you have large sell-offs, people forget about the stock very often. So something that was very hot weeks ago and now is languishing a little bit, sometimes can become a relative play on value, right? So rotation out of hot names that were previously hot names is not a bad thing. Those are the the stocks and the tickers that I'll be looking to pick up personally.
That's awesome. We got a question in the comments. Imre, everyone says find what works for you, but nobody explains how to actually find it. If you could go back and give yourself tips or advice on how to discover your trading style, what would it be, in your opinion, and what best framework for finding it?
Yeah, so that's a really good question. All right. The first thing that you have to consider are your practical constraints. In other words, how much trading capital do you have? If you've got $2,000 to trade with, you're not going to be able to buy Broadcom stock. You're not. Could you buy call options and get the leverage and the exposure that way? Sure, but you're going to be very constrained, right? So if I had like $2,000 to play with, I'm not even trading futures at that point. I'm kind of forced into the CFD market where my position sizing can be as granular as possible. So the first thing you have to consider are your practical constraints. How much do you have to trade with? And what is your tolerance for risk? Right? Because risk tolerance is going to determine how aggressive you plan on being. So I spread my money around in various different trading accounts, and I keep varying amounts in different trading accounts. When I'm day trading futures, I don't need to keep more than $15,000, $20,000 in that trading account. I just don't have to, because the day trading margin is so low that I can still trade very aggressively. But here's the thing. If I blow 15 grand in a futures day trading account, I can replenish it immediately. So I don't need to put hundreds and hundreds of thousands of dollars into a futures account. But I do need to keep a much larger balance in my options trading account because my buying power gets used up a lot more there. So that's just an overview on practical constraints from very low end of the spectrum to the other end of the spectrum. The other thing you have to consider, apart from risk tolerance, is what are my current day-to-day constraints? Do I have a day job? If I'm really busy from morning till afternoon, can I be looking to trade the New York Open reliably? Probably not. Right. So now you're forced into trading slightly different sessions, slightly different markets, right? And this goes back to my own personal experience when I was trying to day trade at my corporate job and it just wasn't working out. I needed to pay full attention and I was in the office, right? So it wasn't easy for me. What did I do? I had to trade after hours. I was really trading Forex, which was an awful experience at the time. But I was trading Forex during the Asian and London sessions and then going to work. So your day-to-day routine is a real practical consideration as well. Now, on top of your day-to-day routine, now we start getting into the psychology of who you are. And this is super, super important. Are you the type of person that wants to be the first person at the party? You can't stand to be late. You want to get there right on time or even a few minutes early? Or are you the type of person that wants to wait until it's confirmed the party's a good time? Right. Good music, there's a crowd. It really comes down to your personality type. So if you're that first type where you're very aggressive, very impulsive, okay, now the question is, how do you make that work for you? How do you make that work for you? How do you make that trading style work for you and not hurt you? Now, I can't answer, I can't answer that for you on an individual basis, but those are the types of things I would think about, because that's going to help determine also my trade duration. If I'm a very impulsive, aggressive type of trader, will I have it in me to swing trade? Maybe not. Maybe that's something that you want to work towards, right? Now, the other thing to consider is the markets. Which markets do you want to trade? Because not all markets are equal. In my opinion, it is far better when you're first starting out to be a specialist in one or two markets at most than be a generalist and look at everything. As you build experience, you're going to develop models and systems for tracking multiple asset classes, maybe even multiple markets around the world. That comes with time, experience, and access to more trading capital. But if you're still trying to find success, be a specialist. Know one or two tickers, names, currency pairs, what have you. Know them inside and out. That's going to allow you to focus your attention. It's going to make you sharper, and you might have fewer trade setups than someone that trades everything, but the emphasis will be on quality. The final thing I'm going to say is build a trading plan. Now, you don't have to get the trading plan right the first time around, but the trading plan should be a process that you're able to follow every single day. and it should be extremely specific. It should be so specific that you could give your trading plan to another trader and they should be able to trade from that plan without asking you any questions. Now, why do you need to do that? The reason is this. Good trading is nothing more or less than a simple data collection exercise. The higher the quality of the data you're collecting, the higher the odds of success for you as a trader are also going to be. So what is high quality data? Well, if you take 100 trades and you show me what your win rate is, what your profit factor is, et cetera, sure, it will look like there are patterns in that data. But if you also tell me that you took a different trading strategy for each one of those 100 trades, now the data becomes useless. There will be no actionable insights. So if you want consistency in your results as a trader, you need to demonstrate consistency in your behavior. And the only way you can have consistency in your behavior is by putting together a very high quality trading plan. Now, here's the thing. The trading plan does not have to be complicated. It does not have to mean you get it right the first time around. You just need a process. Think of it like a high school science experiment. You come up with a hypothesis, that's your trading plan. Second thing you do is you collect data. That's the observational period. And then the third thing you do is you validate whether that hypothesis seems to be correct or not. Just whatever you do, make sure you're integrating high quality information and decisions into your process. But there must be a process, right? And that's why I think having a playbook like we have with the market terminal with certain news events is such an important part of building a solid trading plan. I trade a lot of news events. News events have historically been my best trades over and over and over again. So a big part of my trading plan when it comes to news events is checking that economic calendar that we have and taking a look at the ranges that we expect. And based on the ranges that we expect that I know ahead of time, I've already predetermined those decisions. I know how I'm going to play that news event before the number even comes out. Okay, so that's called predetermination. This is the final point I'm going to say on this. The moment you start giving yourself permission to take a trade, your decision quality falls off a cliff. It degrades immediately, and it's not going to come back up. Your decision quality will not improve as the session continues. So what you need to do is you need to determine, predetermine, and make all the more difficult and complex decisions before you give yourself permission to trade. You can't do that unless you have a trading plan. Once you give yourself permission to trade, your only job should be to execute the plan. That doesn't require a lot of high-level thinking, right? So once you start trading, your decision quality goes down. It's not coming back up. You should not be making decisions once you start giving yourself the permission to trade. You should only be in the mood to execute based off that plan. All right, I hope that helps. Bit of a ramble there, but that's a very good question. Deserves an honest answer.
Bro, awesome, man. Great explanation, great breakdown. We appreciate you. Please look at gold again. Do you mind covering gold one more time? And if you could also pop up the little market, the market ad on there on TradingView too. Perfect, beautiful.
Let's see. U.S. retail sales beat expectations. Yeah, I mean, in a vacuum, that could be important, but on a day with FOMC, it's going to be overshadowed, obviously, by people waiting for the rate expectation. But hey, that's more fuel to add to the inflationary fire.
Yeah.
So what we were talking about with gold, right, is that we're in a range right now. So for me, not very exciting until we start migrating value outside of the upper and lower boundaries of fair value of this range. If you want to play the range, you'd be looking to buy at the bottom and start looking at trailing out as we get closer to the top of the range. That's on a very short-term basis. Now, if I'm looking at this from a slightly higher time frame perspective, this is kind of what I'm looking at. Control level for me is the level that I identify where so long as we're able to build value above the control level, I'm going to be constructive on the asset. Whereas if we start to lose that control level and start breaking down, I've got downside targets in place.
Awesome. We got another question. How do you separate a strong level from a weak one? Sometimes I mark zones that look important only to realize that later they weren't worth trading at all.
Yeah, that's a great question. And there's only one professional answer to that, in my opinion. What makes a level strong or weak has everything to do with how the market has treated that level previously in terms of how much interest it's attracted. Okay, so if we look at any market, what we're going to see is the market do this. And eventually we're going to get a pullback, right? Where's the pullback going to go to? Which level? Which zone? It's going to go to the level where we've attracted a lot of previous interest. So just visually, where have we attracted a lot of previous interest? Here. Here. You know, those are the most important levels because they're the ones that have literally seen the most trading volume.
Yep.
When you have a market with very shallow pullbacks, even in that shallow pullback area, you're going to see what? You're going to see the presence of where traffic was the most one-sided, where buying was the most aggressive, or where selling was completely absent. So I'm looking for areas where we have a lot of interest from buyers and sellers, and then I'm looking for areas where there was no interest from one side or the other. Right? So that's where that term fair value gap comes from. It is literally a gap in trading volume where one side, let's say right here, sellers were completely absent. Sellers might have been fighting this all the way up, and then here they were completely absent. So a fair value gap is not to give the other side an opportunity at fair value. What a fair value gap is that if the buyers that ran the market up through that level do not show up and defend this, they're going to lose it, and we're going to see a much quicker rotation. So that's the only professional answer. You want to look for both the presence of volume and the absence of it. And it's in those areas where you see extremes of one or the other that we're most likely to rotate back towards. That's what makes levels strong or weak.
Beautiful. Great answer. Guys, Imre just dropping gems today, man. You'd think he's a gold miner with all the gold nuggets he's giving you guys. Why magnify? What's going on? In between work duties, coming in to say hi and to mention that trading might be boring today, but market dynamics will change by the end of this year. Eyes on the market. Good luck, guys. Thank you, Why Magnify. Appreciate that. And yeah, absolutely, man, right? A lot of people expecting this to be a bit more of a range-bound market today. You know, a lot of times when a majority think one thing, right? Markets love doing the opposite. I'd love to see some follow-through somewhere today, but as we're doing our analysis, we're breaking down the charts, we see that even on gold, the S&P, everything has been extremely consolidated. We're within the previous day's range. We're sort of failing to move in any direction. We did move lower yesterday on the S&P 500. So me personally, I'm looking to see if we could find some resistance off of the 7612 area over here. This was like Imre was just showing us, right? Points of consolidation before markets move. Well, this was that last point of consolidation yesterday before we moved. We also saw pre-market. We did react to this level already. So again, can we come up, sweep this area? A lot of people think this is a buy opportunity because they don't have those zones marked out, just for markets to sell off on them and again come towards this low and then that next area of support, which again is just that consolidation out to the downside. Awesome, guys. Great analysis. Imre, you have anything to say about the retail sales that came out earlier?
Yeah, so I mean, if we take a look at what we got, right, it's a pretty big beat. It's definitely a pretty big beat, but we have to think of it in the context in terms of what's going on. I think if we look at inflation, can we go to the economy tracker in the terminal?
Yeah, what are we looking for?
The economy tracker, like the one with the inflation rates and all that.
Yeah. It's my favorite tab.
What the market doesn't do based on data is just as important as what the market does do. And like I said, if we were in a vacuum today and it was just retail sales and there was no FOMC, I think we'd see a very different reaction to this news release. However, you know, what does this news release tell us about retail sales? I think what it tells us is it for me is confirming a bigger story here, which is that inflation is on the rise. I mean, look at that CPI, right?
Crazy.
So retail sales are going to only help fuel that higher as there's more demand for things. producers are going to be able to raise their prices. Just because energy costs look like they're coming down in the form of bearish oil right now does not mean that prices are going to come down. If only it worked that way. Right?
Yeah, right.
So here's like the unfortunate truth about inflation. Even if we get down to 2%, which is the Fed's target goal, by the way, so we're over double what the Fed's target range for inflation is. Even if we get down to 2%, well, does that erase all the previous price inflation that we've seen? No. For you guys in America, like Kevin, you're in the States. How expensive are cars right now? Like, how expensive are new cars?
Bro, everything's too expensive.
Everything's too expensive. But I've noticed the trend, particularly for auto, is insane. So even if inflation drops back to a quote unquote normal range, it doesn't erase what happened previously. Unfortunately, it just doesn't. So when we see higher retail sales, it just adds to this narrative that for me, the data says something very, very clear, and it is we are headed for a shift in monetary policy. It's not going to happen today. It's not going to happen, next month. But as we head towards the fall, I think the odds are going to only increase.
Yep, I'm with you on that. Complete agreement. We can even take a look at our Fed Watch tool and see what's going on there. 4 hours, man. First FOMC meeting with Kevin Warsh. Excited to be here. And guys, join me and Emre later for the FOMC meeting too. Emre's like, oh crap, I forgot I was going to be here.
I think this is going to be one of those FOMCs where I'm just going to sit back with my popcorn and watch it. I have very little desire to be popping off on a bunch of positions like day trades today.
100%. These are days, guys. It's important. It's just as important to understand which days are in your favor to also understand which days to stay out of.
Oh, 1,000,000%. Like having reviewed the work of hundreds of traders, like directly, what I can say is that most traders don't have an issue finding good trades. Your problem is probably not that you can't find good trades. Your problem is that you take too many shitty trades, and it's your shitty trades that prevent you from holding on to your big winning trades. So if you could eliminate, the unnecessary losers that you take, what I call the unforced errors, right? The ones that you take because you're bored or whatever have you. If you can eliminate those, your equity curve is probably going to look a lot healthier.
Nope. Absolutely. Just, it's all about discipline. And like, I love how you were talking about earlier too. You can't have consistency without a consistent routine. You can't have consistency without structure. Your pre-market plan, your trade setups, it should be something that you're repeating every day. You can't have consistency without routine. You can't be all over the place and expect consistent results. Let's see. SpaceX looks interesting. I can't believe that SpaceX surpassed Amazon already in market cap. That is wild. Good morning, Brandon. What's going on, brother? How are you? Have a great trading day. Don't forget, guys, FOMC later today, 2 o'clock, and then 2:30 is when Warsh comes on, his first FOMC meeting. Extremely excited to see what he has to say, how he says it, what color tie he's wearing, everything else in between.
Are we going to get a good afternoon?
Yeah, do we get a good afternoon with the purple tie? Or is he going to switch it up with the blue tie and say, what's up, MFs?
That'd be sick. I'm not going to lie. That would be crazy.
I'm here. Get ready. As he straightens up his tie. Took a bad loss yesterday. Disrespected my rules. Definitely needed to hear that going into today. Bro, you got it, man. Listen, every day should be the same. Yeah, bro, wear that market purple. We'll send Kevin Warsh a market AI tie, and we'll see if he wears it.
Actually, Brandon, man, I want to talk to you directly for a second. So this is obviously going to be applicable to all traders here as well. One thing that we have to accept, this is a psychology thing. One thing we have to accept as traders is that you actually don't own the outcome of your trades. In other words, you can't control what the market's going to do. So if you're thinking about the trade that you're in, or the next trade that you're in, or the trade after that, and you're worried about the outcome, it will be very difficult, if not impossible, to take that next step up in your growth and evolution as a trader. So you don't own the outcome. What you do own is the process, right? So there's you can evaluate your trades based on this criteria: good process, bad process, and then there's good outcome and bad outcome. If you have bad process and bad outcome, and bro, I don't mean to pick on you, Brandon, but in your case, you had bad process and bad outcome. Disrespected the rules, took a big L. Hey, bro, at least the feedback is honest. Like, you know exactly where you screwed up, and you know what you did wrong. But what happens when you have bad process and good outcome? That's the most dangerous place to sit in, because now you're rewarding yourself for having broken your rules, and we all know how that goes. So Brandon, you don't have to say this, man. There's zero pressure. But I wonder if before you took that big loss, you had maybe a big win, and you disrespected your rules, and you got that big win, and you subconsciously, psychologically rewarded yourself for a good outcome, and ignored the bad process, and that led to bad process and bad outcome on the next trade. So that's it for bad process. Now for good outcome, for good process and good outcome, that's obviously very good too, but it's dangerous. With good process and good outcome lurks the danger of overconfidence and arrogance. So good process, good outcome can quickly lead to bad process, because you get overconfident and you stop following your plan. Now, if you have good process and bad outcome, that's the hardest box to sit in, because you start questioning everything. That's why traders strategy hop constantly. That's why traders are able to stick to a plan for all of 3 trades, and then they're doing something else. Good process, bad outcome is hard to sit with, but it's essential to sit with. If you can crack the code on being okay with good process and bad outcome, that's when you step up and evolve as a trader. You have to be able to lose and accept that even the best process is going to result in losses every now and then.
That's right, guys. Bowler knowledge right here. Amazing. Thank you, Emre, for the killer knowledge, the golden nuggets, great explanations, great explaining, and trading isn't just strategy, right? We all know that trading is more psychology than it is strategy. I took 3 trades, 1 break even, 1 loss, and then oversized on the third, right? So that could also be, okay, took a break even, I took a loss. This next one, again, subconscious, this next one has to win. I have to make those losses back. I have to this, I have to that. Markets don't have to do anything. Markets are moving regardless. You could be in 10 mini contracts, and markets do not care about your trade. Markets are constantly moving. The one thing we have control over, the few things, couple things, not really, but is our structure, the trade plans, coming back and repeating it daily, and really limiting your losses. Every trade, if you're a consistent trader, should be around the same risk, or you should have parameters. Like Nalab always mentions, right? Am I risking 0.5% on this trade? Am I risking 1% on this trade, or 1.5%? Be able to gauge yourself. This is a high probability trade setup because it checks off more boxes than my last trade setup. Great, then maybe on that trade you want to risk that 1% of your account versus the 0.5% trade. That happened to me last month. LOL had a 15% win on single trade and then blew out 22%. Took me 2 weeks to sit on my ass and do 1 to 2 trades, as well as risk 1 to 3% each trade. That's it, man. That's it. It's all about psychology. Psychology goes back and forth, but for the most part, unfortunately, with trading, we'll have a more negative aspect unless you're following your structure. Market sentiment today, our Market AI Sentiment Index, U.S. Index futures and AI leads stay supported while persistent bearish surveys keep investors underweight, favoring selective tech and crypto exposure over broads, cyclicals, and defensives. I'm interested. I'm really interested. I can't wait for Kevin Warsh to get on, because we all know that he's not going to be like, okay, we're hiking rates this time. No, 99.9% chance that's not happening. But going forward, right? Just like when we listen to earnings and when big companies have earnings reports, they don't just have earnings reports, but they have their earnings calls to give us the forward-looking, right? The onward-looking information. Well, he's going to come on and say, okay, we're keeping rates steady, we're holding rates, but is he going to say due to high inflation, we may look to hike rates at least once this year, right? These are things we need to be keeping an ear out for during this meeting. Imre, is there anything specific you're looking for Kevin Warsh to talk about during the speech today?
Yeah, I'm going to be really interested to hear how he's going to try and balance the political pressure on him, because I wouldn't be surprised if like before the press conference, Trump is like on the phone with him saying, you know,
please
don't F this up, man. You know, I think there's going to be a tremendous amount of political pressure. But the central bank is meant to be independent. It's meant to be fully independent and free from political pressure. So it's a very interesting duality that the Trump administration has kind of started to put forward. And I think your theory about setting up a potential fall guy is really, really interesting. The bottom line is that governors, like presidents, like chair people of the Fed, they tend to be defined by the eras through which they served. You know, I mean, Volcker served during a period of extremely high inflation. Powell served through a unprecedented crisis with COVID, and then had to deal with the insane inflation that followed COVID as well. It remains to be seen what Warsh is going to have to deal with. It's not an easy job. I don't think there's anything Warsh can say other than the fact that we are extremely data dependent. There's so many unknown variables. What I don't think he can say is make any kind of case for more accommodative monetary policy. Like the data does not support that. It just does not. That would be the biggest shock of all to me, is if he comes out ultra dovish, actually.
That would be crazy. That would be absolutely nuts. I'm pretty sure we would probably hear Pal faint in the back somewhere.
Yeah. Now, we haven't really looked at crypto. I know we don't talk about crypto too much. I did mention a little bit, just saying how it's not something that's super attractive right now, considered by investors. Still isn't to me. You know, I've got like 44-ish thousand, in the 40s somewhere as a final landing zone for Bitcoin. At that stage, I think just purely on a probability basis, I'd have to buy some, but right now I don't see any reason to be bullish on crypto. I just don't, man. I don't know about you, Kevin, but this isn't a market that has my attention and has my love right now.
No, not yet. Like you said, 40s would be great. Dip below 50, you know, it really cause a lot of pain. Always talk about where there's pain, there's gain in the market. We can't just start randomly moving higher on Bitcoin. There's got to be that massive amount of pain. And we know, where's there a massive amount of pain? Well, Michael Saylor, strategy. They have a huge, right now, I'm pretty sure they're floating like a lot in the negative right now. I'm going to look it up real quick. MSTR.
Jeez. Look at this chart too. I haven't even looked at that. I'm not like a huge classical chart patterns guy, but this head and shoulders pattern is undeniable.
Yeah.
Yeah. Saylor getting liquidated is kind of on my bingo card for the end of the year, you know?
Yep. MicroStrategy value. Let's see. Total loss. They're sitting on an estimated $8 billion in unrealized losses right now.
That is nuts, man. That is pretty insane. Jeez. Let me see if I can.
What's up, Dexter? Asking real quick, are these recorded? Yes, so these streams are all live here on our YouTube channel, and they are recorded, so you could always go back, rewatch them, and break it down as well. And what's cool, too, if you are using the market terminal, while Imre pulls that up, you could check out our Market TV tab, and this is also where you're able to watch us live and look at past recordings. Awesome, man. Guys, great stuff today. Imre, what are your thoughts? What are your thoughts on people who say crypto is going to replace the fiat currency?
I mean, that doesn't make any sense. Respectfully, that just doesn't make sense.
Okay. Or what about instead of crypto replacing it, more of like a digital currency, right? How the US might be creating a digital dollar, right? Could we be moving into something like that, or most likely not?
What do you mean by digital dollar?
Oh, I don't know. It's funny. It was really more of a conversation way back, when Bitcoin and crypto, what was the other big one? Not Bitcoin, not Ethereum. Oh my God.
Ripple?
Ripple. Yeah, it was like really big. People were trying to say, "Oh, the US is getting involved in Ripple." This XRP, XRP I think is another big one.
Yeah, I don't know if you guys understand how important it is to many state actors, especially including the US, to be able to move and funnel horrifically large amounts of money without anybody knowing about it. Um, when people say digital dollar, like I'm assuming they mean tokenized, which means on the
Right.
blockchain, which means perfectly trackable. Um, yeah, nobody wants that. The CIA doesn't want that. I'll tell you that much right now. China doesn't want that. US doesn't want that. So yeah,
Quick
no, I
answer.
just it just doesn't make sense to me, guys. Like money laundering is too important an industry in the world for us to move to a tokenized dollar system.
That's awesome. That's great. Guys, there's your quick straight up answer on that. Don't expect that anytime
I
soon.
just don't. Okay, like here's my framework for analyzing any question that you could ever ask me. I think about two things: what are the incentives and what are the constraints? What is the incentive to tokenize the dollar? I don't see one. Like what?
Right.
It's going to help the IRS collect more taxes?
No.
Nobody wants that.
No.
Nobody wants that.
Oh, you don't want to pay more taxes, Imre? I'm shocked.
Well, forget about me, forget about you. Like I don't think the people who I don't think Elon Musk wants anyone to know, how much in taxes in theory he could potentially be paying. Right? Like I
Yeah.
don't think Jeff Bezos wants that. I don't think Donald Trump wants that. Like I just don't see the political incentive in terms of who controls government to tokenize that kind of stuff. It's utopian, like it sounds nice, just like how socialism on paper sounds nice.
Right.
Communism on paper sounds nice. Who doesn't want everybody to be equal? But in practice, the incentive system just isn't there, in my opinion.
Gotcha. So let's circle back real quick. We have about 6 minutes before the New York session opens. Can we give traders some levels on the Nasdaq as well? I believe we covered the S&P 500. Let's cover a little bit of Nasdaq. Set some people up with some trades.
All right, let's do it. Let's take a look, guys. So first, some context. All right, and that context is this gap up that we had right here. Now, gaps do not always get filled. There are gaps from years and years ago that are probably unfilled. Most gaps do get filled. The question is, on what timeline do those gaps get filled? Okay, so I think given the distance that we are from the gap today, the chances of filling this gap in NQ are pretty high. It's not an unreasonable thing to be looking for. Okay, that would be the primary thing that I'm interested in from a trader's perspective is there going to be buying interest within this gap? If the answer is yes, I think that could set up some phenomenal trades. I think shorting into the gap, the closer we are to it, the more dangerous that proposition becomes. If I'm looking for an opportunity for this market to break down, 260 points away from where we really started to break down is a lot to ask for on the one hand, like in normal times. But on a day like I'd say a few of them that we've had this week, where we can drop 450 points in a matter of hours, maybe it's not asking too much. So
Yeah.
I'd be very curious. Like this would be a very important, more structural area, and we can pull up the exact range here. That would be roughly, what is that, 38.10 to 37.55. That would be a more of a macro range. We'll go over something a little bit shorter term in a moment. If I'm looking at something that's a little bit shorter term, and I want it to be super opportunistic with a trade or two, there is this build up from 579 to 540. Does that excite me terribly as a trader? It honestly does not. But if we can build value above here, is there a trade higher into the 60s and 70s, perhaps the 80s? Yeah, maybe. This market does not excite me right now. NQ does nothing to get my juices flowing. Absolutely nothing. What we have here, really, I'll just profile everything that's sideways here, is we're near the top of that value area high. So again, like the only trade I'd be interested in right now would be possibly a rotation back towards the value area low of that mini range around 384. Maybe start to trail out around 460. That's just not an interesting proposition to me, though.
Yep.
What about, I don't know, Kevin. What about you? I think you're a little bit more aggressive than me when it comes to day trades. I'm a day trader. I don't day trade every day.
100%. Well, that's, you know what? That's perfect. Circles right back to what we were talking about before. Not every day is going to be a day where you take a trade. But I'm right there with you. You know, I love 30,600 to key psychological point. It's an area where price consolidated. Buyers tried one last stab before we moved lower, right above pre-market highs on NASDAQ too. Would love to see some selling pressure come in up there, especially seeing how bullish we have been on equities in general. Now, let's talk real quick about equities. Now, myself, I do like to trade the NASDAQ, the S&P 500, and I always keep an extra chart up with Meta, Microsoft, Apple, Google, NVIDIA, and it was Amazon. But at this point with SpaceX, is it fair to say you should keep an eye on SpaceX if you're trading the S&P 500 and NASDAQ, or not yet?
You know, I think it's fair to say, just because of how much attention it's garnered, it was definitely something that I was looking at as well. So one thing that I do, the exact same thing you do, I want to look at the leaders. I want to see, not necessarily looking like at the price charts so closely, but one of my favorite setups that I carry into the cash open is if we had a huge earnings miss or beat, like in the aftermarket from the day before. So like when Broadcom drops 10%, that doesn't make me super bullish on trading equity index futures right off the rip on the opening bell. So I just because of so much of the money and the attention has been on SpaceX, it's definitely something that I've been keeping an eye on. And it's not a direct thing where if SpaceX is tanking, I want to short NASDAQ immediately, but it does shift my directional view a little bit, right?
Yep. Perfect. Well said, man. Well said. And even gold, man, such choppy markets, very range bound the past few days. And I'm also eyeing that gap that you mentioned too, right? Now, gaps, you always have to remember context is key in the market. If we start dumping towards these gaps on the NASDAQ, gaps on the S&P 500, a lot of traders, as soon as we enter that gap, will try to short it looking for the gap fill. On the contrary, in my opinion, the way I see these gaps is that these gaps happen in the market, and that area where the gap was created is an area of an imbalance. There were no market participants. There's no volume in that area. We re-enter that area, and all of that volume that was not able to be traded can now get triggered, and markets give us a reaction. But what are your thoughts? Do we fill this gap today on the ES and NQ? Are we too range bound where we possibly tap it and then just start moving back higher again? Market's open in 5 seconds, ladies and gents.
I think my guess would be as good as anybody else's. I do believe the odds of filling that gap lean higher than 50%. Put it that way.
Okay.
So I would like to see that gap get filled, whether it's a partial fill or a complete fill. I doesn't really matter to me. I think the potential for, like, especially in NQ, we can see there is a potential range being built here where we've got the previous highs and then we've got the lows here as well. So if we start filling this gap and there's no interest in buying it at what would be a considerable discount from the previous all-time high, I think the potential for rotation back below, let's say, 29,000 is going to be pretty interesting. As a trader, I would love that. I would really, really love that. As an investor, I would love that as well.
Awesome. Cool, guys. Now, do you think, now you said 50% chance rate, you're hoping, you're looking to see this gap fill. Do you think it's going to fill today? Do you think it's going to fill later with FOMC? Do you think it's going to possibly be the next few days? What are your thoughts?
I think between now and you know, it's a shortened week. So I'd say considering the shortened week between now and the end of the trading week.
Okay. Awesome, man. Guys, great stuff.
Oh,
Good
man.
morning.
Marco, what is up? What is up, brother? Marco, man, phenomenal trader, phenomenal technical trader. Trying to show him some of the market fundamental ropes here and see what we can do.
Yeah,
that
bro,
marriage between the technicals and fundamentals. But awesome to have you here, man. Awesome to have you here. Thanks for coming out.
Absolutely. I'll bring up the full market AI terminal, show them a little bit, give us some insight, show everybody where to get started.
Let's do it, brother. Let's do it. All right. So, you know, as markets open up, we're going to be taking a look at NQ here. Now, we can see that in the market terminal, we have a swing trading bias that's bullish and a day trading bias that's bullish as well. But we've got support levels, right? We've got support levels just above, 30,000. And then we've got support levels at the bottom side of that gap as well. Now, the cool thing here is that we have that bias, and we also know what the headlines are that could come out, or the narrative flips that could come out that could flip that bias bearish, or what would keep it bullish as well. Super straightforward in terms of what we'd be looking for and why. So I think, like, I say this all the time, fundamentals tell you where to look, technicals tell you when to pull the trigger. The whole point of technical analysis is for timing and for framing risk. But the fundamental narrative is more of that compass that points you in a direction. And sometimes that narrative takes a long time for it to flip. It usually does, because the world does not change on a dime. It does not turn that quickly. So I'm very interested to see what we get here. As far as what the market setup goes here, look at the little pullback area there. Look at the path there. What I was talking about is if we can get above this high and build value above it, that does lead to a trade back towards where that area of consolidation that we were talking about, right? So right there, it is that marriage between the technicals and the fundamentals that can help us out. The other thing that we were looking at, could have drawn this box perhaps a little bit more precisely. I think what happened? We got above that value area high, guys. That's what we're talking about, above the extreme of value, and now we get that rotation lower. Is this my kind of trade? Does this get me super excited off the open? Absolutely not. It does not. But for you very aggressive scalpers out there, that's an excellent way to frame trades. What do we talk about with gold? Same type of technical setup, looking for a move from the value area low of that range towards the value area high of it. Right now, that value area high is around 43.70, 68, give or take. So keeping an eye on those levels there if you want to look for a day trade. That one probably interests me a little bit more than what I see in NQ or yes, but we'll have to wait and see.
That's it, guys. Markets have just opened. There's never a reason to force trades, especially right at the open. You have to remember too, some traders have a strategy, 15-minute opening range, 30-minute opening range, where it requires them to wait for that to happen and then break. So again, if you don't have your setup, if we're not near one of your predetermined price levels, you are not to take a trade. Very important we follow our rules and we follow our system to a T. Once we start breaking rules, we start going outside of our system, forcing trades, that's when things start to fall apart. I'm a little interested in NASDAQ down at this level, but I'm seeing just too much weakness on equities. We opened up, Meta started selling off, dipped from $600 closed yesterday. It's at $589 right now. SpaceX also seeing a little bit of selling pressure off the open. It gapped up from 201 to 210, and it is now trading at 207. So let's give it a little time here. Let markets open. It's been only, like I said, 15 minutes. I'd like to see us try to hold this area, but that doesn't mean I'm just going to force a trade. I'm just going to jump in because I want to see it happen. Markets don't care what we want to see.
Seeing a bit of a relief rally in some of those chip names, infrastructure names as well. Very interesting. But yeah, I can tell just by looking at the price changes here that those are those are not extremely aggressive bounces. For example, like if we look at Broadcom, name that I was talking about earlier, we have this decent gap up here, but I mean, we'll have to wait and see. That the price action so far does not look super bullish. Want to see how we deal with this gap. I'd like to see a little bit more downside in Broadcom, before I start pulling the trigger on anything personally. But we'll have to take a look. SpaceX, as Kevin mentioned, a little bit of selling pressure here.
Getting some buyers trying to step in. This is the area, I'm share real quick. This is the area I'm looking at for NASDAQ and S&P right now. This little 15-minute was a consolidation point. We just closed above it on that last candle, trying again to remain above it now. So I want to possibly take a small stab at longs. Again, just trading the range. We're not looking for an extreme move. We're just looking to trade it back to the highs and might even possibly look for a short to take us back to the lows. Eyeing NQ to yesterday's low. Wouldn't be surprised if we get inconsistent price action until FOMC. Bro, 100%. We were just talking about that before too. It is a little bit of a lackluster FOMC day as well, though. We know that they're going to hold rates, but we also know that this is Kevin Warsh's first meeting.
Yeah, overall, for me, so far, this is a pretty dull open. Again, as expected, it's if you're expecting it and you get it, you're not going to feel that FOMO to get into something. At least I hope you won't.
That's right.
But yeah, gold, if we can tick up another $8 or so, could be potentially worth a crack there, depending on the technical nature of the rally. But yeah, and Kevin, I'm going to disagree with you a little bit. I think we have a little bit lower to go still in NQ, but to your point, from where we're trading right now, we did see buyers step in. Any signs of absorption of those sellers could result in that rotation higher. But not exactly the most inspiring market open one way or the other.
No, yeah, I'm with you on that. Definitely, if you are taking this trade or looking for longs right now, it'd have to be lighter size. Know the market conditions and really just be patient, right? Save your capital. FOMCs later, we're going to get more volatility regardless. We know they're holding rates, but that doesn't mean they're not going to say anything like we mentioned about the forward looking. Nvidia selling off too. Yeah, definitely looking a lot weaker here.
Yeah, bond yields holding steady, which is definitely the one thing I'm going to be keeping an eye on as we head into the FOMC as well, into the actual rate announcement. Bond market's been very, very quietly telling us something that's been a very different narrative from the stock market.
Okay, what's that?
So if we're looking at bond yields, the 10-year yield in particular, what is the 10-year yield? It's basically the cost of borrowing for America's debt. Anyone here know offhand what America's debt is right now? It is over $39 trillion.
Wild.
$39 trillion. The reason Trump wants rates low is because the cost to repay that debt is astronomical. It costs more for the U.S. to just pay the interest payment on its debt than it does allocate to the entire budget for military spending. It's an insane amount. And we saw huge relief rally in stocks. We saw, oil crash off as this Iran peace deal was announced. But the entire world that's saying basically, hey, America, we don't think that your interest rate should go down. Basically, it's saying we see risk here. We see risk here and your borrowing rate is going to remain fairly elevated. That's what's going on with the bond market. So unless we see a huge surge in bonds, which would drive down yields significantly because the value of a bond and the yield are inversely correlated. If the bond goes up, the yield goes down and vice versa. Well, that would be a huge welcome sign for the Federal Reserve and for Donald Trump. But so long as we stay fairly elevated here, anywhere in that 4.5% range, it's tricky to me. I think that's a potentially very dangerous sign.
Awesome, man. Awesome. So again, buyers trying to step in, failing. Buyers try to step in, failing. This is a no trade zone. We want to be extra patient here. Let that 15-minute close out. Let some things form. And even wait for FOMC. It's 2 p.m. It's today, guys. There's no reason to be forcing or jumping into trades. If you're not comfortable with the trade, you don't have confidence in the trade, then guess what? You're not taking the trade.
Yeah, I agree with that as well. I think this is going to be a lot of technical positioning and jockeying back and forth before the rate announcement. So not particularly too compelled by anything I'm seeing here.
Yeah, no, not at all.
I think if you're chasing this move up, that's probably unwise. But I also think if you're trying to go short from here, it's not necessarily wise as well. I can understand the argument for there being, broken level of support that we can now see as resistance. But here's the thing: sometimes these technical things are super important, and sometimes it's just noise. And in a market environment like this, I think it's more noise than it is signal.
Agreed. Don't trade this range, guys. Leave it alone. Be patient. Let something play out. Let something more clear show, right? The markets are known to give us clues, give us ideas, give us some type of confirmation. You should look for confirmations in your trade. You should not just be jumping in.
Yeah. Well,
15-minute closes in 2 minutes.
Oh, and we'll be back for the FOMC stream later this afternoon, folks. So
Yes, sir.
We'll be right back at it.
Yes, sir.
All right. Awesome. In the meantime, I've got to get going, guys. I need to start preparing my portfolio for FOMC. There's a little bit of de-risking I need to do on my side with some options trades. It's going to be a little bit of deep work, but appreciate you guys hanging out, and I'll see you later this afternoon.
Emre, thank you for being here this morning, brother. I will see you later.
No worries, Kevin. Take care, man.
Take care, bro. Be good. All right, ladies and gentlemen, we will keep this stream going. Look at that. Buyers ended up holding that buy area we were looking for. That is fantastic. I am not currently in that trade. I did cut it for break even. I entered, wasn't too pleased with the reaction we were getting in that zone. But obviously, I was right and wrong all at the same time as it is holding. So I do hope some other people were able to take this. Again, we're not looking to trade a huge breakdown, not looking to trade a huge breakout, just looking to trade it from point A to point B within the range we've already determined. So stay patient. I would not jump in longs, definitely wouldn't jump in longs up here. I'd really be more patient and wait for that 15-minute to close. Take a look at the 15-minute time frame here. Now, we have 1:11 left. If we get a huge rejection candle here, this could possibly be a trade setup to the upside, a short-term just buys, see if we could take it on higher. If we do fail, then again, we're staying range-bound. We do not want to force any trades, but 50 seconds left. It is looking a bit more promising for the longs at the moment. 50 seconds. Yes, sir. Yo, you already know, man. That's what it's about, guys. Make sure you guys run that like button up, and don't forget to join us later, 2 p.m. Eastern, for the FOMC meeting. Kevin Warsh's first meeting. We'll see what he has to say. And if you aren't already signed up, make sure you guys sign up at marketedge.ai for your Market Edge AI terminal. Extremely helpful. Breaking news. We could see if there are any headlines that came out. Italy rejects U.S. arms program for Ukraine. Iran's nuclear deal faces criticism as opponents label U.S. terms as total surrender. So again, this is not something that Trump is going to be happy about. He doesn't want to see this as a total surrender. He wants to see it as a victory. Absolutely, guys, for sure. Can't go short until we break London high. Yep, I know, man. We'll see. I'd like to see some type of little pullback here. Would like to join in on these longs now, but unfortunately, I do think our long entry was down over here off that 37. That's 100 points right there on NQ, by the way. So if you did take that, you're welcome. Are you waiting for a retest on the retest there? Yeah, I'm waiting to see if we do get a retest near this area. Bit of an inverse VWAP lining up over there too. I do think with the market conditions we're seeing where it's range bound, we're just going to get straight down, straight up, straight down. So if we don't get that pullback entry, I'd be much more interested in seeing, can we sweep this high, hit the supply area, all those people take those longs on the breakout, and then they get faded away. But for now, I would like to see a possible pullback. Yo, bro, you already know. Yes, sir. But let's see. Getting a bit of a pullback here on the 5-minute. We could take a look at our equities too. We see that we do have a range, right? NVIDIA's failing to go anywhere, failing to go higher, failing to go lower. A lot of wicks to the downside telling me that buyers are trying their best to step in. Let's see. Very close to that re-entry point down there. We did pull back on this last 5-minute and 1 minute to let that close. Be patient. Again, we're not forcing trades. We're just watching the markets right now. You can also take a look at the VIX. We could see if gold is giving us any opportunities. Gold is very range bound. And what we can do, guys, don't be so glued to the charts. Add an alert and walk away. What you're doing also when you're adding alerts is you're giving yourself the opportunity to say, okay, if this alert triggers, I can go look at it and take that trade. If it doesn't, then I don't take the trade. But here is the retest area. We'll see if it does want to work as a possible entry. Again, though, seeing how range bound we are, I wouldn't be surprised if we had a drop, we had the pop, and then we just had another drop right back to this zone again. So if you are taking it, by all means, guys, this is a day that you size the heck down. There is no reason. You got nobody to impress. A lot of people too, because of the whole content creation and Instagram, YouTube, Twitter, all this stuff, people feel like they have to impress somebody. Oh, I have to take a big trade. If I don't take a big trade, then I don't have a good screenshot to share. I'd hate to break it to you guys, but nobody gives a crap about your screenshots. It could help, but who's that really helping? That's not helping you in the long run. It's not giving you strong confluence. It's not giving you a good strategy that you could follow. So just be patient. Look at this. Again, I wouldn't be surprised. We pop, we drop. We pop, we drop. Leave it alone right now. Be extra patient. If you do take any trades, you want to trade maybe half of your normal risk. No reason to be going regular size right now when we already know the market conditions. And we knew the market conditions before New York session even opened. We knew it was going to be range bound. So again, unfortunately, missed entry down here on the longs. This is an okay pullback area, but I wouldn't be surprised if we just came right back towards this 30,438 as well. Guys, let me know what you're trading right now in the comments. What are you trading? Are you in any positions? Are you long? Are you short? Are you looking to take any trades? Why and why not? Like we were talking about yesterday with Nalab, guys, drop your trade ideas. Let us know what you're looking at, why you're looking at it, and what confirmation are you trading with? Are you trading the NASDAQ because SpaceX is moving higher? Well, look, SpaceX is moving lower now. Apple's trying to move lower. Microsoft's moving higher. NVIDIA's trying to wick on higher as well. So just a matter of being patient. I'm a big fan myself of using equities as that confirmation and seeing equities as more of a 50-50 point right now would, again, give me the idea to stay away. XAU USD only. Why? Because I don't want peace. I want problems. That's great, man. That's great. See that? Again, like I said, I wouldn't be surprised if NASDAQ just dumped from here and came all the way back down towards 30,437. Not surprised. It is a range-bound price action. Look at this, 22 seconds left in the 5-minute. We are absolutely running out of time for markets to prove buyers are holding us higher. 15 minutes sure gave us the close we were looking for, but now we're not getting any follow-through. Those are the market conditions that we are prepared for, so don't take any trades going into this. It's just not worth it. Stay patient. We could even look for XAU USD. I won't. You guys are funny today, man. I'm really more patient. I would love to see a reaction on GC 43.75 on S&P and NASDAQ. I wouldn't be completely against taking another long entry off the retest of this zone, but I also wouldn't be completely for it, knowing that we're range bound. There is no consistent trend right now. So just be patient. Let markets do their thing. There's zero reason to force any trades. Just wait. Equities, like I mentioned, equities are all dumping right now. We see Nvidia's trying to move lower. Microsoft is the only one trying to hold. Apple had a huge sell candle that last 5 minute from 301 down to 299, almost a $1.50 move. No reason to be jumping in longs right now. No real confirmation on that, in my opinion. Look at that. Like I said, what if we retest the area and we hold? We know we're range bound. People trying to sell these lows just for us to range back higher? Not a surprise there. Just not a surprise there. Am I taking it? No. Am I going to take 5,000 different entries today? Absolutely not. I'm going to wait. We'll wait for FOMC to give us some more insight, some more clarity, and then we could possibly look for a trade. But right now, no trade. Can't wait for SpaceX to drop so I can, bro, I'm with you on that, man. SpaceX needs to start selling at some point. I don't think it's going to really drop strong anytime soon. I think it might take a week or so, keep trapping buying participants, make those buyers think that they're always right. And then boom, a huge sell off. We go from maybe 250 all the way back down to 140. But right now I'd want to be extra patient, really see how things want to play out. See that again, range bound on NASDAQ, range bound on the S&P 500. S&P's holding a little bit stronger right now than the NASDAQ. Does that mean I'm going to jump in NQ? No. Or ES? No. Weighted index trying to hold. This bottom chart down here, guys, is called a weighted index chart. Basically what it is, it's a combination chart of Apple, Microsoft, Nvidia, and Google. This is very helpful for traders who don't have multiple monitors but still want to be able to monitor equities. Look at this. Again, buyers came up and then they failed. Sellers bring us down and then watch, they're going to fail. Too inconsistent right now. We're stuck between a rock and a hard place in that sellers are trying and they're failing. Buyers are trying and then they're failing. Leave these markets alone. Like we were talking about before, it's just as important to know when to trade, just like it's important to know when not to trade. We did have any fair value gap traders out there. We did have a 1 minute fair value gap in that zone that we tested. This one was broken. We're not interested in that anymore. So again, if we were in a trending environment, yeah, this would be a possibly great trade setup. We're not in a trending environment. That is not a great trade setup. We're in a range bound market. We'd want to buy low, sell high. We wouldn't want to short this right now, but I also would really be against any longs right now too. Just be patient. And guys, guess what? Longs could play out here. That doesn't mean, oh, wow, I should have gotten it. I got to chase it now. No, that's fine. Markets are always moving. You have to throw out the idea that markets are moving without me. Markets are always moving with or without you. Markets do not know you. Markets don't care about you. I'd hate to break it to you, but that's just the truth. So be prepared and know yourself more than you know the markets, right? You have to know yourself so you know, okay, I know that these conditions usually don't play out well for me. I'm going to stay out of it. These conditions, fair value gaps, normally don't play out well. I'm not going to take that trade setup that I normally would. All about patience, all about consistency, all about follow through. We can take a look at our market in the morning terminal, our market AI terminal. See, we had a headline: Iran seeks Chinese investment and energy partnership after U.S. deal framework. So it's just a lot of back and forth. We're not getting any big headlines that are saying bullish. We're not getting any big headlines that are saying bearish. We're range bound right now. I'd much rather see us just trade right back to the top of this range where we were just at. That's why, if anything, I'd be buying the lows and then getting out at the highs. I would not be jumping in the middle right here where I know we could wick around and possibly stop out. 4 seconds left in this 5 minute, giving us a small close. 15 minute also trying its best to hold right here, but we know we're range bound. Again, don't force any trades. It is never worth it to force trades. Ever. Never, ever, ever. See that? Look at that. 5 minute failing. Then it holds. Then it fails. Then it holds. It's not worth it. You really want to trade markets that are not giving you consistent direction. It's the silliest thing you can do. Gold also trying to move higher, struggling, waiting for gold to give us a better area. What do you think about gold current sells around the 50 zone? Yeah, so I'm looking, not a big fan of this 43.50 on GC. 43.50, yes. 43.50 on XAU USD, yes. That would be an interesting area. Sweep of those recent highs we had. I'd much rather see us come up towards 43.76 on GC, and that would be 43.55 on XAU USD. That's ideally what I would be looking for. Again, what happened? Buyers stepped in. Well, guess what? Everybody buying these highs, this big sell candle, guess what it just did? It just stopped them out. And if it didn't stop them out yet, we're probably going to see an even deeper dive here to stop them out. So leave it alone. Don't jump in shorts right now. We know that also what happens at this area. Buyers step in. We don't want to be jumping in short when we know buyers were protecting this level, but we also don't want to be long knowing that we're more range bound in a bit more stronger bearish conditions at the moment. SpaceX is still dropping. Nvidia's dropping. Apple's trying to hold up. Microsoft's trying to hold up. To range bound. These are not market conditions that are going to give you a clear and clean cut trend. Leave it alone and let it be. See what I'm saying? Not worth it. You would have been in for some profit. You would have thought you're the man, and then bang, right back to stop loss. Leave it alone. Leave it alone. Yeah, we're probably going to be looking for gold, as gold has been a bit more of a consistent grind higher here. See if we can get that 43.75 short. 43.55 short on XAU USD. But there goes NASDAQ making a new New York session low of day and heading towards that pre-market low. Bang, smashed right there. Too much selling pressure to want to be long right now. Leave it alone. Nvidia's dropping like it's hot right now. So is Meta. Microsoft's holding and Apple's holding. SpaceX just came back to that gap that we had tried to fill. Again, an area of support. Wouldn't look for longs, wouldn't look for shorts. I'd look to stay patient until FOMC later. It is 9:57 right now. Markets have been open for almost 30 minutes. Look at the 30-minute time frame. It's a strong sell candle we had on our first 30 minutes of the New York session. Does that mean I'm going to jump in a random short? No. But does that mean I'm going to go for a long thinking of a reversal? Absolutely not. Staying patient is the play today. Period. Look at this. See that? XAU USD struggling in this red area. This was a supply zone, rejection area that we had. Give markets a few more minutes for the 1 hour to close. Wait for rejection. I would sell gold if it touches a few times 50 zone. Yeah, great area. Great spot. Like we were just mentioning before. Very good spot right there. There goes NASDAQ continuing to drop. Now, on the other hand, if we do get some strong selling pressure like we're seeing on Nvidia, like we're seeing on SpaceX now too, yeah, that's going to give me a lot more confidence to possibly take a scalp trade on NASDAQ to the downside. Without that, there's no reason to be jumping the gun. Ever, 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 ever. So be patient. Let things play out. Let this 5-minute close. This 5-minute wants to close below this zone, then sure, we'll look for a possible retest and short it, but we really don't have much downside, right? We do have, what we have, Tuesday's low. I think is Marco, you still in here, bro? I know you were looking for let's see, NQ low from yesterday, which is, yes, right at that bottom of that zone. That's also going to be leading in towards that gap fill area. We wanted to see that gap fill get tested on NASDAQ and the S&P 500. There goes S&P making a new low during the New York session. New low of day also for futures market. NASDAQ did not make that new low of day during future session. That would be right over here around 30,307. But bang, there we go. Some more shorts setting up. 15 seconds left on that 5-minute. Definitely getting that more bearish close that we were looking for on the breakdown. The question always becomes, where do we get that follow through? Where do we get a possible pullback? 3 seconds, 15-minute closes here. Hourly candle just closed there as well. Very much more bearish than bullish. Ideally, would want to look for some sort of pullback. If we don't get the pullback, we don't get a trade. That's simple. That's simple, guys. But would like to find a pullback for a short. But remember, we got to be extra patient. FOMC today. We just had some news as well. A economic event, economic data. Gold eyeing. Let's see. We just had pending home sales up 3.8%. God Damn, almost 4% pending home sales change. That is wild right there. A higher than expected reading signals economic strength and is typically bullish for currencies. A lower reading suggests weakness, putting pressure on currencies. NASDAQ, that's more bearish. Higher is more bearish for our equity. So again, that supports a pullback, a short opportunity. But be patient, wait and see. Pulling back towards that zone that I was looking for, right? This was support. We see it was support over here. Now that we broke below it, can it act as resistance? That's what I would want to be waiting for. We have 4 minutes left in this 5 minute. We have 13 minutes left in the 15 minute. We're obviously pulling back right now. Does that mean buyers are reversing price? No, we see there's more selling pressure. NVIDIA getting ready to dump here too. Not much reasons to want to be long. We also have the VIX trying to spike higher. VIX did make new high of day. Gold chart, I got you guys. Absolutely. And also, yeah, dollar at resistance. Okay, cool. Let's take a look. Lower time frame on the dollar. Dollar trying to move higher from here. That would also help support a more gold short. Not a big fan of the gold shorts just yet. I do want to see it move a little higher. But listen, if it respects these lower highs, then yeah, this is a great short opportunity on gold. NASDAQ pulling back some more. NVIDIA still heavily bearish. Really wouldn't be interested in longs right now, mainly because of how NVIDIA is trading. NVIDIA opened up at 209, is now trading at 206 and moving lower as we speak. So is Google. There goes that drop on NASDAQ again too. So just be patient. Don't sell. Definitely don't want to sell these lows. When we break down, you do not want to sell lows. Guess what? If you keep a tight stop loss, you're going to get stopped out and want to re-enter. If you keep a wide stop loss, you might be risking too much. Wait for a pullback. Enter on a pullback. That should always be your entry criteria, is a pullback. VIX still moving higher, which again supports ES and NQ to the downside. Look at our weighted index chart down here, completely dumping. That does give me some confidence in the shorts. 204 left on this 5 minute. Just wait and see, guys. Wait and see. We can take a look. Let's see. Gold trying to hold to move lower right off of that area on XAU, USD, and GC as well. NASDAQ, again, look at this. Prime reason we don't just enter randomly short at lows. You would have got in short near 30,326 just for it to pull back 60 points against you. Sell the pullbacks. If you think we're in more of a bear trend, we sell the pullbacks. Take a look at what oil's doing. I am interested to see what oil's doing at the moment. I wonder if oil's giving any better short opportunities. Oil gave a killer short yesterday. It unfortunately did not hit that level. I'd like to see if it could possibly pull back 76.85 for a short position on oil here. So let's see how that plays out if oil does want to give us that short opportunity. NASDAQ, look at that, pulling right into that area we had mentioned. How are NVIDIA somewhat pulling back? Microsoft just fell off a cliff. What else do we have? Microsoft fell off, Apple selling off. NVIDIA did flip green on this current 5 minute candle. Be careful there. I'm still not convinced buyers want to reverse price. I'd want to be patient. I'd possibly look for a short off of this pullback, but I'd really just much rather wait. And really, we're most likely just going to be waiting for FOMC later. Don't see any clear-cut reasons. You know, VIX moving higher is great. It did have a bit of a pullback this current candle, but I do want to see some follow-through on the VIX. NASDAQ trying to drop. Everyone's waiting for FOMC. It's the smartest thing to do is wait for FOMC. Look at that. NASDAQ trying to hold up again here. Look at that. Again, people trying to short. Boom, stopped out. People trying to go long. Boom, stopped out. Just wait. These are not clean market conditions. Got to be able to recognize that. Hourly was much more bearish, right? It's also important to be able to recognize higher time frames. Look at that. Gold also turned back around. So I said I'd want to be a little bit more patient even on gold too. NASDAQ trying to dump, but I'm just not convinced that sellers really want to take this. NVIDIA trying to move lower. SpaceX continuing lower. That's amazing. SpaceX was at 210, is now at 192. That does give me confidence in the shorts on the NASDAQ. Just pulling back. If you're taking any trades today, they should be scalps. You really shouldn't be looking for a buy and hold or a sell and hold today on the S&P and NASDAQ. Same with gold. Just be patient. Trade the range. Don't force anything. Let markets play out. Let's see. Nvidia starting to dump again. Google also weak. Again, a lot more weakness than strength in equities. I'd much rather be in a short than a long, but it doesn't mean we're going to be chasing. Because remember, what have we been seeing today? We've been seeing buyers step in and then fail. Sellers step in and then fail. Why would we want to short lows? Why would we want to buy highs? We don't want to do that. We just don't. Look at that, trying to turn back around on ES and NQ again, even if it's short term. Just wait. There's no reason to be jumping the gun in any trades. Created a fair value gap over here. Maybe that works, but we know market conditions are not favorable for a trend right now. We know that. We know that for a fact. When we know that for a fact, that means we know to stay patient. Let's see. Definitely, again, looks much better on the sells than the longs, but doesn't mean I'm just going to be jumping in randomly. I'm staying out of this. I'll let you guys know if I am interested, if anything does pique my interest on a stronger bias for a short. But look at gold. Gold and oil are really going to be the main two I'm watching right now, as ES and NQ are clearly chopping. Yeah, guys, go drop a like, go drop a sub. We appreciate that, Famous. Absolutely, man. Always, guys, we're live Monday through Friday for Market in the Morning, 8:20 to 10:30 a.m. Eastern every single day for you guys. Look at that. Look at that. Buyer stepped in, told those sellers, yeah, you would have thought, and boom, right back to the upside. Again, if you shorted 30,355, markets pumped 50 points against you. Not a fan of that. Who wants to be in a short trade and have NASDAQ pump 50 points against them? Not me. No, sir. Trump reports very good conversations with Modi. Let's see our breaking news tab. Anything else massive coming out? There's nothing major coming out. Sadiq, good morning. What's going on? Guys, anybody who did win the free market monthly subscription, it was a 1 month free subscription for market from the wheel that we spun last stream. We are sending those out soon. So very cool there. It's 10:08 right now. Look at that. Like I said, 5-minute fair value gap. We know they haven't been playing out today because we're range bound. It would have, boom, entry, boom, stop loss right away. Don't trade this market right here. I can't emphasize it enough. Don't trade this market. Let's see. ES back to VWAP. NASDAQ also trying to get to VWAP as well. Oil slowly chopping higher. Now, one of the reasons too I'm a bit more interested in the oil shorts is because the fundamental analysis is much stronger on oil to the downside than it is on these other assets to the upside or downside, right? We know that we had more of a bullish turnaround on ES and NQ. We know that things have also been very choppy though, so it's also very important to be aware of that. Look at that, 50 seconds left on this 5-minute. I'd let it close. Why would you just jump in randomly? You shouldn't. You wouldn't. Let's take a look at SpaceX. SpaceX, look at this, guys. This is crazy. Nice sell-off there. 8% drop from the open on SpaceX right there. We're going to be hearing headlines, man. If SpaceX can continue lower, that would be huge. Imagine SpaceX heads its way towards 180. All the people buying at 220, they lose 20% of their position in a matter of 1 day. They're going to feel a little silly. So be patient. Let markets do their thing. No reason to be jumping the gun. Wait for FOMC. Possibly we get some insight. Possibly we don't. Weighted index trying to pull back. Nvidia is still a lot more bearish than bullish. I really wouldn't be so quick to be jumping in longs. I'm more interested in shorts, but I also wouldn't be jumping in shorts, just like Imre was mentioning, right? These are range-bound market conditions, not something that's favorable for either direction. Look for a short somewhere, but it's just, do you really want to short something that we see is clearly in a range? Now, we know sellers have had some momentum. VIX trying to move higher too does give us confirmation on the shorts. And ES rejected right off VWAP. That's a nice rejection. NASDAQ still range bound though. Since 10 o'clock, we have been within this 50-point range. So if we were looking for a trade, we'd want to sell the highs, possibly buy the lows, but we don't want to be getting in right here in the middle of nowhere. It's a middle of nowhere, middle of no man's land, no trade zone. Gold still trying to chop its way higher. Oil, beautiful, man. I'd much rather, like I said, I'd much rather be way more interested in some oil shorts. And think of it this way too. We also already broke previous day low. We've had some very strong bearish price action on oil. We're not looking for a huge trade. We're not looking for a full reversal. We're looking to follow the trend. So yeah, if we could get a short position on oil, that would be huge. Well, let's see. Let's see L. Crude oil. XAU USD not clear for me. That's it, man. Got to sit on your hands for FOMC. Got to sit on your hands before FOMC. Oil trying to make its way towards that 76.82 area. 76.85 is that ideal short entry. And we'll see. Again, just a matter of being patient, letting markets play out, letting markets come to us in our predetermined areas, follow our plan, follow our system, and don't force anything. Look at that, man. NASDAQ, again, any traders who took the shorts, bang, right back in their face. Any traders that took longs over here, they got stopped out too. ES and NQ is a major no trade zone today. Look at that. Boom, higher, boom, higher. NVIDIA, what else? NVIDIA, SpaceX trying to hold. Apple trying to hold. Meta trying to hold. Google trying to hold. Leaving these assets alone. Waiting for oil. Waiting for gold. Waiting for something with a bit more of a clear range that we could sell the highs and buy the lows versus ES and NQ. Look at that, man. You took this trade, you would have been stopped out again. Waiting for things to play out. This is a no trade zone. We have extremes to the downside that we held to the upside. We have extremes to the upside that we're trying to hold to the downside. If markets aren't respecting a zone, don't marry the zone either. Delete it. Take it off your chart. Gold. Where's oil? Come on, oil. Get up there, man. 76.85. We're about 20 cents away. Yes, sir, bro. Appreciate you. Yes, sir. Always, man. Got to bring the hype. Got to bring the energy. Got to bring the fire to these shows. I want to give you guys the best information, strongest follow through, and the best clarity that markets can give us. Now, looking at oil, look at this move higher. Hey, appreciate you guys. Absolutely, man. Always, don't forget, man, throw the like button up. Our goal is always at least 50 likes per stream. Keep that running. We appreciate you guys. We do this for free for you guys every single day, Monday through Friday. So you guys are amazing. And we're building a community here. This isn't just, oh, join me live, join Imre live, join the lab live. No, it's an honor and it's a privilege to have all of us here. But we're building a community. I always see you guys in here. Famous, Sadiq, Silver, Abdul, everybody, man. I see you guys. And I appreciate you guys. There we go. There's oil. Big pump up. I'm not just grabbing a random short. We have 48 seconds left on the 15-minute to close. I'm waiting on that to close. If we don't reject here, then I'm not taking it. If we start to reject for these next 40 seconds, I'll take it with that selling pressure and I'll put my stop at the recent high. If we don't do that, we don't take it. Period. Got to be able to have your zones mapped out, but also be able to be patient for your zones to give us a reaction. Yeah, oil's moving crazy right now. 20 seconds left and it's just moving higher. Take a look, see if any headlines came out. Oil is more of a bearish bias. U.S.-Iran peace deal and Hormuz reopening unwind war risk premium. Okay, starting to reject a little bit here on oil. Nothing wild, nothing crazy. Getting some headlines here too. See if anything comes out. Trump says Russia sanctions tied to oil prices. Okay, so let's see. What's this mean? What's this mean for oil prices? Let's break that down. Look, oil's trying to move higher. I'm being patient. Leave it alone. 30-minute closes in 15 minutes too. I am interested in shorts in this area. Just would need to see some selling pressure. Not jumping in blindly. We never jump in blindly in these markets. Risk off bias with higher geopolitical risk feeding back through energy and inflation. Let's see. Framing Russia sanctions as explicitly tied to oil prices signals a willingness to weaponize supply, supporting crude and headline inflation expectations. So this is a bit more of a bullish on oil, right? Because if they're threatening with oil supply, what they're doing is they're saying we're going to take that supply away. We're going to use that as our foundation to threaten it and say, okay, we're going to take that oil from you. We're going to sanction your oil. We're going to make those prices higher. So be a little patient, be a little careful. I like how the structure's starting to build here, but I'd much rather wait and see a reaction first and then possibly a lower high form like that. That could be something we could look for on oil. Without that, we're not just jumping randomly in shorts up here. Just like gold, right? We're not taking a random trade on gold either. Not taking a random trade on ES and NQ either. This is a sit on your hands and wait. Let markets come to us. Wait for FOMC to see if we get some type of follow through. But that's it. There's no reason to force anything in markets. Lower high is hopeful. Yeah, we'll see, man. I'd still like to, as long as we remain below 77.28 on oil, I would still want to look for a short. So we could move up here. We can move up here, chop around for a little bit. And once we start to consolidate and break lower, that's when I would take the short entry, stop at the recent highs. But until then, no trade on oil, no trade on NASDAQ, no trade on gold. Be patient. A patient trader is a profitable trader. Be patient. Look at this. Again, oil trying to move higher off of those sanction headlines. We know that if they're risking supply, there's a supply issue, price moves higher. 77.05 just hit. Just waiting. Gold chopping. Oil chopping. Are you still? Yeah. Yep. Yeah, we'll. No, so we're not on. Oh, bro, that'd be crazy. We're not on until FOMC, unless somebody over here wants to come bring me lunch. But we'll wrap up this live stream around 10:30, and then we'll be live again at 2 p.m. Eastern. So very excited for that. We shall see. Not jumping in. Look, we're wicking a little bit. I'm not just going to randomly jump in a short position. We did that a few times in the supply zone and then moved higher anyways. So I'm waiting to see an actual reaction to the zone, an actual sell-off, and then I'll look for the retest. I'll take it on the retest. I'm not jumping in short up here. There was a saying that my mentor taught me a long, long time ago, and it was, you'll never be the first buyer, you'll never be the first seller. And that doesn't mean you'll never top tick or bottom tick, but when you have the mindset of, oh, we're starting to reject immediately, I need to take it, you're going to have a bad time. 30-minute, even the 30-minute. If I wanted to wait for the 30-minute to close, I'd want the 30-minute to close somewhere over here and say, okay, give me a longer upper wick, reject this 30-minute supply, create a new 30-minute supply, and we'll take it short. 5 minutes struggling to move lower, but it is trying to move lower. It's exactly what I wanted to see. It's a game where you want to be second, not for Mitch, shout out to Mitch over here in the comments. Well said. It's a game where you want to be second and not first. You try to be first, you're going to get stop hunted 40,000 times. Take some time to rest. Yeah, exactly, famous. You get it. Yeah, bro, we're gonna be chilling in between streams. Guys, don't forget, follow us on social media. Is marketinsights.ai. What is it? marketai.insights on Instagram and market_AI on Twitter. Look at this. There we go. Now we're getting that reaction. If this 5-minute closes, which 10 seconds left, it's most likely going to, I will look for a retest into this zone to take it short. And again, we're just trading the trend on oil. We're not looking for the biggest moves. We are looking for a big move because we're trading the trend, but that's it. That's it. Let's see. Let's see if it gives us the retest. If not, you can always look to enter a bit lower, have a wider stop loss, risk less. But I'm looking for a retest of the zone. If we don't get it, then we just don't get a trade. If we don't get it, guess what? Markets will move, will give us another type of trade setup, whether it's a fair value gap, low volume shelf, whatever the case may be, and then that becomes my entry. But until then, I'm not jumping in randomly. And also Trump always throwing some nonsense, bro. Trump saying right now about Iran, they want a deal. They want a deal. Trump would think they would do it. If they don't do it, we'll start again. I mean, come on now. Come on now. Then you just see like oil shoot up to like $80 again. But let's see. And even this is a long target, right? Let's look for the open price right over here. So I want to see a pullback, retest this 76.85 area on oil. I would possibly look for some shorts on oil. NASDAQ and ES slowly chopping their way higher. Glad we didn't just keep trying shorts there. There goes oil trying to give us a pullback. Gold also still trying to move higher. It's what I said, guys. We're not at that peak yet on gold. We're range bound. We shouldn't be expecting lower highs to form. And also, look at this, guys. So you know we were mentioning lower high, lower low, lower high, lower low. We were making lower highs, but we were making higher lows too. So these lower highs are not confirmed. Oil trying to pull back here. Now, oil, on the other hand, from this lower high, did create a lower low. So right over here. So if we can pull back, again, create that lower high over here, that would be phenomenal. Oil trying to pull back, did not give me entry yet. That's fine. We stay patient. Gold trying to move higher. Oil also trying to get back towards that 76.84. I'd be a little careful on oil. Yeah, definitely not rushing gold. Yeah, good, bro. Good. The Rochester, that's what I'm talking about, bro. Don't rush anything in these markets. Ever. Ever. If you think markets are moving without you, I promise you they're going to give you another opportunity. They will give you an opportunity, and when you see it, you will be able to take it. Oil did not test that level. I was looking for 76.80, 485-ish. It hit 76.78. Just waiting. Listen, guys, if oil wants to dump here and we create a fair value area, we create a low volume shelf, whatever that imbalance is, then I'm going to take that. That's going to be my entry then. But right now, I'm waiting for a retest of that zone. Gold moving higher, just staying patient, guys. We have to be able to be patient traders. No reason to not be patient. The market is notorious for taking money out of the hands of the impatient and giving it to those of the patient. Dollar moving higher, which would support gold moving lower. So look at that divergence we have. This is our dollar chart right here. Dollar's moving higher while gold is also moving higher. Big spike on gold. There's a divergence going right into our supply area. Oil, unfortunately, continuing lower without our entry. It's moving without us. It's moving without us. Get out of town. Get out of town. If you have that mindset, get out of town. Oil doesn't move without us. Markets don't move without us. Markets just move, period. Let's see. Guys, let me know what you're trading. Did you take any trades today? Are you green on the day? Are you red on the day? What trades did you take? Okay, there goes oil, about to trigger my alert level right now. There's that push higher. Love that my alert didn't trigger. That's fantastic. That's great. It's what we want to see. There it is. Big pump there. Gold flying. Guys, aren't you happy you didn't chase gold shorts down over here? Now short it. No, I'm just kidding. Just wait. Just wait. Just wait. I promise. Just wait. Even oil, like I said, let it keep moving lower. That's fine. If the 30-minute wants to close lower, which look at that 30-minute. This is exactly, look at the blue line I marked out. This is exactly how I want this 30-minute to close on oil. If it gives us that, I'm looking for this fair value gap entry trade, low volume imbalance up there too, and looking to take it to the downside on oil. Yeah, that pullback was wild. Wild. And this 5-minute just opened 10 seconds ago. Oh, no, I'm sorry. The 15-minute just opened 10 seconds ago. No. Yes. No, maybe so. No, 15 minutes. No, that closes. I was looking at that 442 left. I thought we were on the 5-minute chart. Oil is ironically being greedy. That's really funny. That is really funny. Look at this, man. Oil, bro, right off of that spot. I did not have an entry myself. If you guys were able to take that trade on oil, drop some W's. But that was a great, great spot on oil. I didn't take it. I'm not kicking myself about it. 30-minute closes in 5 minutes. Guess what I could do for 5 minutes, guys? Sit on my hands, just like we've been doing all morning. Yo, gold, this is an area I'd consider shorts on gold. I'm just saying, right? We get a big spike up like that. This is similar to last week's price action where we got a huge spike up. The lab called out those shorts, and then oil sold off like crazy from there. 3-minute inversion on oil. Nice, bro. Nice. Yeah, 5-minute also, right? We have a 5-minute fair value gap there. We're about to break it. We just broke it lower. So yeah, oil's solid. Oil is solid right here. Just trading the trend. We know oil's much more bearish right now. That's why I said before, even before this occurred, oil is much more in our favor than anything else right now because it's the only thing that's truly giving us a trend. Waiting on that 30-minute. You guys like the new background? We updated it a little bit. Got some chess pieces. Got the clock going. That way I could hear it tick behind me. I got to get a bell going for the New York session open. Ding, 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 ding. Gold. Consolidating. 15-minute closes in 3 minutes. I'd let the 5-minute close. I'd wait to see, just like we did on oil, give us a bearish candle reacting to this zone to tell me sellers are stepping back in. 43.60. On XAU USD. I mean, this is looking like a decent spot for possible shorts on gold. Oil is pulling back very strong right now. This purple zone, I marked it out because I was looking for a fair value gap to form. It did not form, so I don't want to keep that there to fool anybody. I've noticed it a few days ago. Nice, bro, nice. Waiting on that 30-minute. It's so important to see how that 30-minute closes. We have 2 minutes left for the 30-minute to close here on oil, and I want it to close right where we are right now. So I wouldn't be surprised if we moved higher and then we moved back lower, or we moved higher and then came back to where we are, moved lower, then came back to where we are. But for right now, I'm just staying patient. I don't see any reason to be forcing trades. There never is a reason to force trades. We're looking for oil shorts for no other reason than we're following the trend. Minute 55 left in the 5-minute. Look at that. Like I said, let that 5-minute close on gold. If you were waiting for the 5 minutes to close, you wouldn't have taken a loss right here. Gold. Market says gold is bullish. Kevin wants to short it. All right, let's see, man. Let's see. Let's pull up gold. Hey, listen, you know what? Flip watch. You never know about the flip watch. Russia Black Sea port, U.S. Iran peace deal and war ending agreement optimism. It's really just something to keep an eye on in a sense of headlines too. Trump says U.S. would aid India if attacked. You know, it's just keep an eye on the headlines. U.S. says Iran leadership wants deal. Like they want a deal, then they don't want a deal. So yeah, you're absolutely right calling that out, right? Market is saying bullish on gold. Maybe I should flip this bias, right? I shouldn't be looking for shorts up here. I was going off of my levels, but we have to remember levels help. Levels give us some insight, but it's the actual fundamentals. It's what's behind the market that actually moves the market. 50 seconds left, man. I really want these oil shorts. You don't even know, bro. I'm itching a short oil. 40 seconds, ladies and gentlemen. Be patient. 40 seconds, 30 seconds. And guess what, guys? If oil starts pumping from here and closes above this purple area, I'm not taking it. I ain't flipping till Jev chilling. That's how H calls me. Bro, 100%, man. Yo, no trades on gold until Jeev calls it. Jeev is the GOAT, man. Jeev and Alabro is some of the best gold traders I know. All right, 30-minute. Giving us that closure. I'm looking for a short opportunity on oil. See if we could find it somewhere. Okay. A little bit of a pullback. I'll take it light size on oil myself here. The reason I'm taking it light is so that if it does continue in our favor, you know, we're in a trend, we're in the trade, we're going good. If it does move back towards this supply area to retest it one more time, I'll be able to re-enter a bit stronger. But I really want to see that follow through. Really want to see sellers step in on oil. Just got a headline too. So watch that headline. Let's see what that headline was. Where we at? Trump says talks with Anthropic progress well. Oh, maybe they'll bring what was it? Fable 5 was out on Anthropic, and then they took it away. There's the retest of the zone. That was the retest I was originally looking for, just saying. So I'll look to add up here, because again, this is the original spot I was looking for the trade entry on oil. Remember, we were looking for the retest of this zone. So re-entry right up here off the retest, stop near the high 77.01, just to play it a little safe. If buyers do want to just keep on continuing, then we protect ourselves. That's the whole point of a stop loss, is to protect ourselves. 337 left in the 5-minute. I'm not a big fan of the strength that's coming into oil at the moment, but like I said, we're going to give it a little time. I don't see any reason to really be that scared. And when you have a stop loss in place, that's your comfort. That's your security. Your stop loss is your security. Gold struggling. Oil definitely trying its best to pump up. Really not a big fan of that. Just be patient here. Another push up on oil. Just be patient, man. Be patient. 3 minutes. Want to see it start to reject here. A bit of a double top going on and push back lower again, just following the trend on oil. I know that we are coming off of some extremes, but we're just looking to follow the trend. Create a lower high over here so we could go head back towards lower lows. If it doesn't, we break this lower high, we make a higher high, then we know that oil is now also entering more of a range-bound market. But until that happens, I'm looking for oil to hold these shorts. Gold continuing up. There we go. Glad we weren't just jumping in random shorts on gold. Oil, on the other hand, look at that, trying its best to keep on moving. Let's see. 2 minutes left in the 5-minute. Not a fan of that strength. Look at that on oil. That is not what we want to see. Just be patient, let it play out, and if it hits stop loss, it hits stop loss, ladies and gentlemen. That's the way the cookie crumbles. You cannot force trades. You cannot make markets do what you want markets to do. You have to read and listen to markets, and again, that's what stop losses are for, protecting ourselves. Minute 38 left. I'd love to see this next minute 30 start to fail here on oil. If we don't get that, then yeah, I do believe there's going to be some more upside. We might head towards 77.30. Gold also trying but struggling to the upside. Targets, if you are long on gold, GC is 43.91. XAU USD would be around 43.69. Oil doing its best to shake out sellers, in my opinion. So just be patient. I wouldn't be looking to go long on oil in this resistance point, that's for sure. So I would really just be patient. I am in a short on oil, and if it stops me out, it stops me out. If it continues, it continues. That's the way the cookie crumbles, period. Gold trying to hold, but I'm even on gold, I'm not a big fan of trying to just jump in randomly on gold too. So we'll keep an eye. We'll take a look at ES and NQ2. Look at those. Look at that. We sweep highs, we reverse lower. We sweep lows, we reverse higher. Range bound price action. Oil moving back to the downside again, back below that zone, what I wanted to see. Just wait, man. Just wait. It's why we have stop loss and we respect our stop loss. Gold is really a no trade zone too. Oil, got to start dumping here on oil. Want to see it below 76.70. Give me some confidence. Get below 76.70. A lot of like fair value gaps getting inverted. There we go, 76.70. Get below that 76.70. There we go. We're below it. That's great. Now, can we have some follow through? We've been holding long enough. Looking to see if oil can give us some follow through to the downside. Get below 76.50. We'll see. We'll see. It might even retest this zone one more time, right? A lot of people just tried buying oil up here just for price to reverse on them. So again, I'm short, not looking to be long on oil, but I'm just staying patient. I'm in my trade. I'm not forcing anything. Dollar try and move back lower, which would help support gold to the upside. Could be a possible long entry on gold here, but I wouldn't want to go long on gold knowing that, look at this, guys. Just zoom out on the chart. This is the top of the range for the past 2 days. Do you really want to buy high? I'm pretty sure the saying is buy low, sell high. So why would you want to be buying these highs right now? Oil still trying to reject, moving in our favor finally. Just had to be a little bit patient. Markets are not going to just go from entry to take profit that fast unless you're a scalper and you're looking for those momentum plays. But just be patient right now. Be patient. Look at that. It could do anything it wants. Markets could do whatever. Again, that's why we have stop losses. That's why we manage our risk. NASDAQ trying to move lower. Now, let's see. We're getting another headline there. Let's see. U.S. oil storage hub sees critical plunge in inventories. Uh-oh. So again, lower inventory usually means higher prices. Being careful, keeping my stop loss now at that recent high that we just made on oil, just managing the trade. Gold struggling again, why we're not just buying randomly at high. NASDAQ dropping, but we're not. Now, ESNNQ, great example also of this is a no trade zone, and there have been no entry criteria. We've been trying to move lower, and then we try to move higher. No fair value gaps, no low volume shelves. We sweep higher, we move lower. We sweep lower, we move higher. We're trading a range right now, period. There's no debate about it. Oil again trying to come up near that spot. We have 7 minutes left on the 30-minute. It is 10:37, ladies and gentlemen. We do usually wrap up the streams by 10:30. I am going to be wrapping this up. I wanted to try to stay on to see oil move in our favor, so we'll try to let it play out for another minute or so. Guys, if you run the like button up, if you drop some comments, spam something, spam some W's, we'll keep the stream going for another 10 minutes. And don't forget, join us later for 2 p.m. Eastern. We're going to be covering the FOMC stream as well. But spam something. Let me know if you guys want me to keep this going to watch how oil plays out. If not, happily wrap up the stream and go about my day. And guys, if I wrap up the stream, I'm staying in the trade. Just means I'm wrapping up the stream. Entry still over here. Stop loss still over here. Yeah, bro. W for the market team, man. Best team on planet Earth. Gets shit done. I was gonna say gets blank done, but we've cursed enough on the show. I'm pretty sure I could say shit. Oil trying to hold, struggling. I love to see the struggle to the upside. Gives me nice confirmation that these buyers are starting to lose steam here. This volume profile I do want to update. Let's see if we can do that. Let's put that at the beginning of our New York session, beginning of our future session, I should say, right over here. So we see our value area high, value area low. Where's our value area high? Oh, right over here. Value area high is all the way down here. So again, we're extended from there. I want to see us come back towards that area. Buyers are not giving it up without a fight, though. Oil is something that can find a clean trend. So we're letting that 15-minute close. We see the rejection we have up here. Look at these upper wicks telling me sellers are active in this supply area. So I'd much rather be with the sellers than be against them at the moment. 50 seconds left in this 5-minute. 5 minutes left in the 15-minute. Just wait, guys. No reason to jump on in. Hey, yes, sir. W's in the chat. Look at that, man. Gold rejecting that supply area. Love to see it. Oil trying to hold lower too. Love to see it. Wish I could trade olive oil. Bro, I wish we could trade baby oil. Nah, I'm just kidding. Let's see. 76.70 trying to hold. Yeah, guys, keep those W's coming. We'll keep it going until 10:45 to see how the 15-minute closes on oil here. If oil does close on the 15-minute somewhere much higher, like over here, I'd much rather look to close that trade out. I'm looking for the 15-minute to close. Remember, we had the 30-minute closing down here, which it did. Now I want this 15-minute to close somewhere below this level, 76.68. So the 15-minute, it could close bearish. It could close a little green. Whatever. As long as it's below this level, it'll help give me confidence. Nice 5-minute close there, bearish, finally showing me sellers trying their best to step in. Lower high, need us to start breaking down lower. I've entered with 1% on a gold, on a short gold sell below 43.57, 43.57. On XAU USD, good job, good entry up there. Oil, man, oil's really playing around right now. I feel like oil's one of those that if you stop out now because it's taking too long to get to your target, it's going to then move to your target. Remember, oil is a much slower moving asset than some of these others, ES and NQ and gold. So just let it do its thing. ES and NQ. ES, new low of day. VIX, new high of day. That confirms bearish trend. I'd look for ES. Honestly, I'd like to see ES come down to 75.57. Bro, oil, stop messing around, bro. Yeah, 1 minute chart. Yeah, I don't like the 1 minute chart, but I saw too many rejections. Cool, bro. Nice. Yeah, I know I'm not a big fan of the 1 minute either. I feel like it does give a lot of mixed and false signals. Getting some headlines here again. No, nothing crazy. Cushing crude stock falls to operational lows of around 20 million barrels. Its lowest since October 20. Does it say 2014? Damn. Gotta let it close, man. Gotta let it close. 5 minute, 15 minute. Unfortunately, look, buyers are trying to step in, but we know that this 5 minute has 3 minutes left. That's plenty of time for it to just create another upper wick and start dumping again. We don't want to stop out just because it hasn't moved yet. That is not a reason to exit. When you enter a trade, the only reason you get out is if it hits your stop loss. That's it. Stop loss or take profit. 1042, ladies and gentlemen. And oil is doing its best to try to move on higher here. Looking like it's going to try to sweep that recent 5 minute high. Mark that out. Again, a lot more confidence if oil could close below this blue level we have at 76.68. If it fails, we exit. That's it, man. You got to be able to respect your trades, respect your levels and zones. Oil, let's see, oil, anything here on oil? Looking for this short setup to occur. It is, like I mentioned, trying its best to hold higher. Minute 55 left. We know that that's plenty of time for it to wick on lower here too. 15 minute also has a minute 50 left. I mentioned if it closes on 15 in the supply zone, most likely going to be looking to exit. We can close somewhere near this blue level, going to look to hold. That's simple. Create trade parameters, create a system, create a strategy, something you can repeat daily, be able to read higher highs, higher lows, market structure, everything. It's so, so important. Guys, a minute 25 left here on the 15-minute time frame. And on the 5 minute, 30 minute closes in 16 minutes, which again, the 30 minute time frame, I wanted to see this candle close just like it did. And then I wanted to see a really strong sell-off here. So for that to occur, price would need to get below this purple level that I just plotted at 76.37. So here we go. Look at that. Like I said, plenty of time for it to wick back lower. 50 seconds, unfortunately, still enough time for it to wick back higher too. Being patient, trading with the trend, that's all we can do. That's it, man. I would be careful on gold shorts. I'd probably look to call it a scalp if you are in gold shorts, as it's been more range bound, just like ES and NQ. Look at this divergence. ES made new low of day on that last 5 minute. NASDAQ didn't, and we're getting a bullish reaction. Oil just dancing around 30 seconds here. 15-minute closes in 20 seconds. Very, very, very important. We're staying very patient. It's all we can do and manage risk properly. 12 seconds. Unfortunately, that's tough, man. It's looking like it's going to try to stay higher. 4 seconds. 3, 2, 1. I'm not a big fan of that. I still like the rejection. It still hasn't closed within that supply area, but we're just lacking the follow through to the downside that I was originally looking for. I'm going to keep my stop loss at this recent high, see if it wants to play out. If it doesn't, I get stopped out, and we go about our day. Don't forget, though, FOMC is later, 2 o'clock today. Hopefully, we get some more volatility and we get some more follow through. Guys, that's the end of our market in the morning stream today. I hope you all have a great rest of your day, and I'll see you guys all back here at 2 p.m. Eastern for FOMC. Imre will be joining me as well. Really give you guys some strong breakdowns and really some good insight. So, guys, have a great rest of your day, and I'll see you all later. Peace.